Taking a look at the Fear and Greed Index, 71 out of 100 equaling greed, and the Crypto Fear and Greed Index, 81 out of 100 equaling extreme greed. And taking a look at the VIX, currently down 1.59% at 12.99.
production rates high 20s per month, and Boeing's financial target of $10 billion is predicated on the company getting to 50 airplanes per month in the 737. That's a pretty tall order. And so it's a balance between quality and quantity. And ultimately, there's a shortage of airplanes and demand is very strong. Airlines all want aircraft, but at the same time, again, you have to balance quantity with quality. So it's really hard to please everyone when you're struggling with execution. And having aircraft is a big differentiator in a period where capacity is desired.
And let's talk about what this means for the stock price, because you did see Boeing shares. They did pop yesterday. They're down again today, and they're down 27% year to date in 2024. Just a total wipeout there. In your view, do you think that the worst is over for Boeing stock, or is there more to come?
Katie, I think there's more to come. If you look at the bear scenario for Boeing, and by the way, my bear valuation is about $130 per share. I think that's underestimated by the market because ultimately the FAA is taking a harder stance on looking at Boeing's non-conforming manufacturing. And if you look at deliveries in January and February and month to date in March, it's been slowing to a trickle, which means if Boeing is producing at a higher level than what they're delivering, you're going to have a cascading amount of inventory aircraft piling up at Renton. And that means that you have a lot of working capital tied up for aircraft that you can't deliver. That could hurt their ability to ramp up later. And so when you look at the effect of this, if the duration of a stricter view on the FAA on non-conforming manufacturing stretches for even longer, that could be more painful for Boeing. And if we see a potential risk to a 30% cut in deliveries in 2024, cascading into 25 and 26, we could see a valuation of $130 for Boeing.
And I mean, many have framed Boeing's struggles as a positive for Airbus. And you and I were speaking in the commercial break about how it's really a duopoly between Boeing and Airbus. But talk to me about Embraer. When it comes to who could actually pierce that duopoly and be a serious competitor here, could Embraer actually be an alternative?
I mean, Katie, you hit it right on. Building aircraft is really difficult, and entire nation states pour in their industrial resources to build an aviation industry, and many haven't been successful. And Embraer, based out of Brazil, has actually done it. The Embraer E195 E2 actually competes with the 737 MAX 7 and the A319neo, as well as the Airbus A220 family. And so if you look at a potential third player, there really aren't anyone else with a certified commercial jet aircraft except for Embraer. So in this environment where demand exceeds supply and Boeing's unable to deliver the airplanes that they want to deliver, and by the way, Airbus, even though they're producing more, also is not able to deliver all the aircraft that they want, there's only really one aircraft manufacturer you can order from, and that's Embraer, and they have available slots in 2027, 28, 29. And does it make sense for Embraer to only have a $5 billion market cap, considering how difficult this industry is? And what we learned from Boeing is, look, producing airplanes is hard.
Kristen, great perspective, of course, on Boeing's struggle and also the industry at large. Hope to speak with you again soon. That is Kristen Luwag of Morgan Stanley. Let's stay in the clouds because a new Dallas-based startup is out to disrupt the airline industry by offering semi-private chartered planes at near business class prices. Joining us now, I am thrilled to say we have Alex Wilcox. He is the CEO of JSX, and of course, JSX, it's a hop-on jet service that serves 48 routes across the U.S. and Mexico. Alex, it is great to talk with you because it almost sounds too good to be true. Of course, you can hop on a 30-seat jet in Morristown, New Jersey, or in Westchester and get down to Boca or Miami. Your flights start at $300 each way. You take a look at some of your competitors, they're charging thousands for that same service. How does JSX make money?
Well, Katie, thanks for having me, and I appreciate the lead-in. We make money because we have more than a couple of people on board. Obviously, with one or two customers on board, like a private jet, we'd be losing our shirts. But we have 30 seats on our public charter aircraft. They are Embraers, by the way, and we fly the Embraer 145 very proudly in a configuration that's unlike what you see on the network carriers. There's no overhead bins. There's bright lights. We're the launch customer for Starlink as well. So we're the first and so far the only air carrier on planet Earth that has Starlink on board every airplane, every flight, every day. It's, by the way, faster than home services through cable or even Fios. So as you can see on the video, there's 30 seats in every plane. It's a very spacious 30 seats. There's nobody sitting next to you. There's nobody breathing on you. There's a cocktail table between you and the customer across the aisle from you. And there's room for dogs. We welcome lots of dogs on board, up to 70 pounds, by the way. Small dogs that fit under the seat are free of charge, unlike our competitors, and large dogs, you can just buy a seat for them. There's plenty of space.
Yeah, no middle seat. I have to imagine that is very popular. And to your point, Alex, you have more than just a couple people on the plane, which certainly helps when it comes to making money. But how thin are the margins? I mean, I'm asking for the casual viewer who is probably sitting at home saying, it's got to be expensive to fly even a 30-seat aircraft.
Well, our model is great. We've been flying for 10 years, actually. Obviously, COVID took a little chunk out of the business for a period of time, but our latest quarter, we had 15% EBITDA margins, and we're very proud of our financial success as well as our popularity with customers as the highest rated air carrier in North America, if not the world. We've got a net promoter score that are frequently 70s and 80s, in an industry that gets 20%, in some cases get negative net promoter score. So the financial results are there, but the financial results only exist because our customers love us and they keep coming back to us. We provide a super seamless experience. You can show up 30 minutes before the flight, just hop on and go. For your casual viewers that haven't tried us out yet, you can buy tickets, of course, at jsx.com. And we're growing very rapidly, and we attract a lot of attention from our customers, in particular for the very unique kind of service that we provide that we're very proud to do. All 1,000 people that work with me every single day have customer service at the core of our focus, and that's really what differentiates us in the industry.
And of course, that rapid growth, obviously your competitors aren't thrilled. And some have pinpointed, of course, your safety standards. Some have said that JSX should be required to meet post 9/11 safety protocols such as scanning IDs, limiting liquids, removing shoes during screenings. Have you received any information from the TSA about any proposed security changes to these public charter carriers?
Well, look, we're in touch every single day with NTSB, FAA, TSA, and the DOT. And obviously, there are regulators, and we're in close touch with them on a regular basis. And not once has anyone from any of those agencies told me directly that they have a concern about any particular safety or security practice. We are way above and beyond compliant in terms of our safety and security practices. A lot of the reasons that the aviation industry is so safe is because of safety programs that we voluntarily adopted. Flight operations quality assurance, safety management system, and a pilot ASAP program. These are all things that are the big contributors to commercial aviation safety. The public charter category in which we fly is 45 years old, 0 fatalities in 45 years. The Embraer 145 that we fly, I'm almost hesitant to say it, has almost 30 million hours of total time across the airframe, across every airplane in that category ever built. Again, 0 fatalities. We have an unblemished 10-year operating history. We're proud of our compliance record. We're proud of our operating history. And anyone who challenges it is definitely not challenging it with us or with the regulators, but they're just trying to basically create fear, doubt, and uncertainty among our customers because they're afraid of the competitive threat that we represent.
Well, Alex, I appreciate the context there. And let's talk a little bit more about that growth, because I was looking at it. You're up from 6 routes in 2016 to 48 routes today. You were flying 641 flights in 2016. Now you were at nearly 35,000 flights in 2023. Are you planning to add more routes from here? What goes into that?
Yeah, we absolutely are planning. Obviously, you need airplanes to fly. We have 48 aircraft. Which is the right-hand column there that you're looking at on the screen, that are currently in service. We actually own 77 airplanes. We're acquiring some more even as we speak. So we've got several years of growth ahead of us. Excuse me. And every airplane is going to fly roughly 4 or 5 flights a day. It's a lower utilization kind of operation. We don't fly 10 to 12 hours a day like crazy because we own these airplanes outright. We don't have to pay a note on them. So our balance sheet is very, very strong. We're a debt-free company as well. And so we fly when the market wants us to fly. But in terms of future growth, as you mentioned, about 35,000 flights last year. We'll do more than that this year. And then as we add additional airplanes in the coming years, every one of those airplanes will be several hundred flights a month in additional capacity. So the sky's the limit for us, no pun intended. There are plenty of airplanes for us to acquire out there and to put into service. We don't have the same kind of supply constraints that were referred to in your previous segment. So we've got an open road in front of us.
Alex, I'm sad to say I only have about 30 seconds left with you. And in those 30 seconds, would you consider an IPO in the near future?
Well, it depends what you mean by near, but I wouldn't rule anything out. That's a question for our board and shareholders. But certainly this is the kind of category and the kind of company that's going to have public company quality ratings. And I'm not talking about a SPAC, I'm talking about a real IPO if and when the time comes.
All right, Alex, so enjoyed this conversation. Really appreciate your time today. Our thanks to Alex Wilcox, the CEO of JSX. Now coming up, Apple is being accused of violating antitrust rules. We'll be joined by Bill Baer, Brookings Institution visiting fellow, to discuss what the DOJ must show. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep winning World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
right, it's time now for our Wall Street Week Daily segment. And today, we're taking a deep dive into the DOJ's antitrust lawsuit against Apple. Here with more details, I'm pleased to say we have Bill Baer. He is Brookings Institution visiting fellow, as well as Wall Street Week host David Weston. And David, this is all about the walled garden.
Yeah, exactly right. And that's where we want to start with Bill. Bill, thanks for being here. This is your old shop, the Antitrust Division of the Department of Justice. This is not the first time somebody's gone after Apple, and by the way, Microsoft and others for walled garden. Why is this one different?
Well, what the Department of Justice complaint says is that this ecosystem that Apple has set up and claims it's all about consumer privacy, consumer security, is in fact a mechanism to lock us into our iPhones. And I'm an iPhone user, love the product, but that they've basically manipulated that ecosystem to make it very hard for anybody to communicate off an Android system, that they're engaged in a series of actions that profit the company, but serve no useful purpose to consumers. They are trying to limit competition, the government says, in order to maintain their dominant position in the U.S. market, which is somewhere between 60 and 70%.
So, Bill, you bring up the U.S. market, but which market are we talking about here when it comes to the DOJ allegations, and how strong is their claim here?
Well, first, look, I know Apple has suggested it's a worldwide market, but that's not how antitrust analysis works. It's who are the consumers that are potentially affected, subject to price increases, to diminished innovation, diminished product quality, and that group of people are the U.S. consumers. So Apple's effort to turn this into a worldwide market, which diminishes their market share, I think ultimately is going to fail. But the government is going to have to show that these limitations that Apple puts on the use of its product are actually designed to improve product quality and not intended simply to maintain or enhance its dominant position with the iPhone. And one of the challenges that Apple is going to face is there are internal documents cited in the DOJ complaint which suggest the motive here is to limit competition and not to protect and benefit consumers. I was in private practice many years, worked with companies who wanted to tell a public story about how everything they were doing was worthwhile and consumer-oriented. But you go through the company documents, and sometimes that's not at all what they're saying to each other inside the boardroom.
Yeah, I have to say, Bill, when I was in private practice, I never had a case there wasn't a bad document or two in. There's always somebody who's saying something foolish. But let's assume for a moment the Department of Justice actually prevails in this. They prove that there is a relevant market that they monopolize and that they've taken anti-competitive acts. What are the likely remedies? Is it really going to tear down the walled garden?
I think it's going to open up the walled garden. I don't think, the government hasn't indicated exactly what remedies they want, and that's the wise thing to do. You got to see what the court says is a problem, is an antitrust violation. But I suspect that limiting its ability to, for example, degrade the quality of messages that come in on an Android phone, preventing Apple from basically only allowing the Apple Watch to sync with your iPhone, those sorts of restrictions, which arguably are not justified, a court could say, you got to give it up. One of the interesting issues at play in this case is that over in Europe, there is a new law in effect just in the last couple of weeks called the Direct Markets Act. And that law is requiring Apple to do some things in Europe in terms of opening up its walled garden that it says it just can't do. And so we're going to have a track record to see whether Apple's claims that its whole ecosystem will collapse and consumers will be injured by what's going on in Europe. And there are complaints from the European Commission about whether Apple is in good faith complying with the new terms. That'll sort itself out, and so we may have a test case that a court can look at to see whether Apple's claims that it can't do things differently, in fact, hold up to scrutiny.
Well, Bill, I'm glad you brought that up because it is interesting that you have these two parallel allegations happening at the same time. And it sounds like you're saying potentially the EU case may provide some sort of blueprint, perhaps, for what's going on at home.
That's exactly how I see it. You know, it's going to take, what, 2, 3, 4 years for this case to get to trial, for us to have some sense of whether DOJ's allegations hold up or not. In the meantime, Apple, which is saying we cannot do what DOJ says we need to do, is going to be having to do those very things in order to comply with the law in Brussels, the European Union law. So we'll have a sense of what works and what doesn't.
So, Bill, 3 or 4 years, that gets us into the second term of either Joe Biden or Donald Trump. Does this case survive a second term of Donald Trump?
Well, you never know, right? And given the concerns about what a second term of Donald Trump will look like, it's hard to make a prediction. One of the interesting things, though, is this investigation began in the Trump Justice Department. Indeed, 2 weeks ago, former Attorney General Bill Barr wrote an op-ed bragging about having started that investigation and kind of claiming credit for the case that was about to be brought, even though 4 years later he had no idea what was going to be in that case. But so there's some reason to believe that there is bipartisan concern with the dominance of big tech, and it's not just Apple, it's Amazon, it's Google, it's Facebook, it's others. So I'm not going to predict, but it's not 100% clear to me that this case would go away.
Bill, one last quick one, inside baseball. Why Newark? Nothing against Newark, but I wouldn't normally think that case would get filed in Newark. Are they forum shopping?
Well, the United has a really good lounge. That's one possible theory. But in the Third Circuit, which includes the district court in Newark, the government and private plaintiffs have prevailed in these cases, which are difficult to prove, that allege in unlawful efforts to maintain a monopoly. And so the case law there is more extensive and more favorable than anywhere else in the country. I don't know that's why they chose it. Someone could have a relative in Newark, but my hypothesis is that the favorable case law may have led them to initiate the lawsuit there.
All right, Bill, have to leave it there, unfortunately. Really appreciate your time today. Our thanks, of course, to Bill Baer, Brookings Institution visiting fellow. David, who else do we have coming up?
Coming up on Friday, we're going to deal with geopolitics. We've got Josh Bolton, who's the head of the Business Roundtable, talking about the difference between, on the one hand, Biden and the other hand, Trump when it comes to economics. And then we'll have Gillian Tett from the Financial Times talking about how investors should discount the geopolitical risk. That's at 6 p.m. Eastern Time on Wall Street Week.
All right, David Weston, thank you so much. And we do want to keep you updated on today's big story, and that is that 6 workers are still missing after the Francis Scott Key Bridge collapsed early this morning after it was hit by a container ship chartered by Maersk. Search and rescue operations are still ongoing. At a news conference earlier this hour, police said that there were no signs of terrorism. For its part, Maersk is warning of Baltimore-bound cargo delays as it reroutes around the port. We'll bring you all the latest details as soon as we get them. Now coming up on Bloomberg Television, Marissa Mayer, Sunshine co-founder and CEO. She joins Bloomberg Technology with Ed Ludlow next. This is Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
The Fed says interest paid on reserves nearly tripled to $176.8 billion, and the US to sell $75 billion in 4-week bills on March 28th to settle on April 2nd.
Tech sector with Denny Fish of Janus Henderson. Plus, we'll hone in on some corporate news as Alibaba calls off its planned IPO of Canal, which could have raised more than $1 billion. And we get the read from inside the C-suite. Later this hour, we'll be joined by Marissa Mayer and by Danny Garcia, the powerhouse behind Dwayne "The Rock" Johnson. But first, we want to bring you some important updates on the search and rescue mission underway in Baltimore after the Francis Scott Key Bridge collapsed early this morning when a cargo ship struck the major transportation route. This is a live feed of the Patapsco River and the wreckage from that crash. Right now, search and rescue is the primary focus in Baltimore. There are also major implications for global trade, as the Port of Baltimore is the largest handler of U.S. imports and exports of cars and light trucks. The FAA has currently restricted drone flights near to the bridge. U.S. Homeland Security Secretary Alejandro Mayorkas said in a post on X that the Coast Guard is on the scene to assist local partners and is, quote, actively involved in the search and rescue mission. We're expecting to hear from President Biden later today, and we'll continue to bring you updates on the situation in Baltimore throughout this hour. Okay, sticking with what's happening in markets, this is the NASDAQ 100, up 0.3%. Remember, we're coming off the best week of the year so far last week, the tech sector playing a role in that. We're going to have a conversation about NVIDIA, softer by 0.5 percentage point, but when you're a $2 trillion market cap company, you pay attention to that. Yields creeping a little bit higher, 4.26% on the US 10-year, and Bitcoin is staying above $70,000 per token. There was that big move just before the show, actually, 24 hours ago, higher towards $70,000 per token. That markets picture is kind of a wait-and-see moment because of all the Fed speak that's due to come in the coming weeks. Let's get back to Baltimore and stick with the collapse of Baltimore's Key Bridge. You're looking at some of the automotive names because, as we have stressed, that port, while small in the context of US ports, is the biggest handler of import-export for car and light trucks. In the last hour, we spoke to the CFO of Ford and got his real-time reaction to the broader implications of what's happening. Have a listen.
It's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit.
It's a developing situation. Ford CFO talking about having to divert parts to other ports on the East Coast. How serious is this? What is the impact to the economy and supply chains? Let's bring in Denny Fish, Portfolio Manager of the Global Technology and Innovation Team over at Janus Henderson Investors. And Denny, while we have you here, you wake up to news like this as a money manager. How do you feel about it?
Well, it's a tragedy, of course, and you just hope that the people that are unaccounted for.
The World Trade Organization say on China-Australia trade dispute, the panel recommended that Australia brings its measures into conformity with its obligations under the GATT 1994 and the anti-dumping agreement.
When we had severe shortages of components throughout the entire automotive supply chain, we can get the parts here through other ports. It just might take a little more time, and it might be a little more expensive. But that's how I would think about it, but not a material impact to the tech ecosystem anyway.
Well, quite. I mean, I remember so many days spent at the port of Los Angeles, literally days and weeks down there. Part of that story was inflation. Mm-hmm. Right now, we're trying to tie together what's happening in the economy with the tech sector. How closely are you waiting on the Fed, and how nervous are you each day, Denny? I know you're not a very nervous person about inflation and when the Fed's going to pull the trigger.
Yeah, I think what's happened with inflation is it's come down a lot. There's still some sticky elements to it, and maybe we don't get as many cuts from the Fed as we thought we might towards the end of last year. But nonetheless, I think the direction of travel is that the Fed will start to ease at some point. It's just that pace of easing might not be as aggressive as one might have expected a couple months ago. But that's good for stimulating the economy.
Denny, we're here to talk about technology, and I think we cannot do that without speaking about NVIDIA. Mm-hmm. It's an important name for you and your fund. We're soft to 0.6% right now. There's a brilliant story on the Bloomberg. NVIDIA traders find reasons to worry beyond sky-high stock price. I know that the gain in the price is something you have reacted to and you consider, but the logic outlined in the story is that a lot of the potential gains from NVIDIA, the feel-good, it's been brought forward and happened in a very condensed space of time. Just give me your thesis on NVIDIA right now.
Yeah, absolutely. So if we actually look back to last year, it was something similar. Most of the gains from the stock actually came in the first half of the year, and particularly Q2 after it really became known just how big of a supply-demand imbalance that we had for GPUs. You could argue this year maybe the same thing has happened. I mean, the stock's put on $1 trillion in market cap since the beginning of the year. It's pretty much unprecedented. But what's important about it, and I think this is what makes it hard from an investor standpoint, and that is the reason the stock's gone up so much is because earnings have gone up so much. If we go back 18 months ago, I think the street thought NVIDIA might earn somewhere around $5 a share this year, and that's probably going to be closer to $25. So the stock, actually, if you look at the earnings multiple on 2025, it's actually still quite reasonable. Now, we can argue what might happen as supply-demand comes into balance, but nonetheless, the demand profile out there remains unprecedented, and the valuation remains reasonable.
We're showing some animation of Blackwell.
Yep.
How big a moment was Blackwell for you?
Yeah, it's actually a big moment because it's a continuation of how NVIDIA has been innovating over the last several years. And importantly, a couple things. It really focuses on price performance and power consumption, which are two big issues for GPUs. I mean, it doesn't get as much attention, but power is probably the single biggest constraint to deploying inference across the global economy because of just the inability to get enough power into these data centers. And then you have to cool them as well. And, there's a lot that comes along with that. But the other thing is, Blackwell is going to be less expensive than the H100. And so that also shows you NVIDIA's confidence that the visibility that they have into demand, that they can actually start lowering the price despite there effectively be no elasticity
So
in the
that's
market.
my final question on NVIDIA. I was in the room for 90 minutes with Jensen, and he basically said, starting this year, the data center business is $250 billion per annum, but he was talking about growth rates of 20 to 25%. What's still not clear to me is like the tipping point from where the majority of that is training to inference, because I don't think NVIDIA's talked as much about inference. AMD came out really hard with the inference story. Just how much did you buy, I guess, the soft guidance that he was giving?
Yeah, it seems reasonable. And actually on their last call, if I remember correctly, they actually talked about inference now has crossed over half of workloads relative to training. Now, AMD needs to talk about inference because NVIDIA's pretty much won the training market. And so the next prize out there is inference. And inference is going to be, it's going to be multiples of the market opportunity that training is, because this is how you deploy it. It's like developing something and then putting it into production. That's what's going on with AI workloads right now. And so that should continue to be a really healthy tailwind for the ecosystem as a whole.
The other story or data point I was watching overnight is China's iPhone shipments fell 33% in February. It's a name that you have a smaller position in. But it's really interesting. I mean, let's just focus on corporate Apple and China. Is that a data point that worries you?
Well, it's not surprising. And it's not surprising because over the last year, you've seen China actually retaliate somewhat to the restrictions that we've placed on them for all of our most valuable intellectual property as it relates to the semiconductor ecosystem.
Right, there was the reporting this week from Bloomberg that the Chinese government was basically trying to get any server designs that power government compute to use domestic semis going forward.
Yes.
But sorry to interrupt. Back to
no, but that's exactly right. And so what they're doing is they're trying to find ways where they can actually exert some power and some market influence. And that's really tough for Apple because they're saying no state-owned enterprises. They're starting to extend that. So it's incremental demand loss in one of the most important markets for Apple globally. Now, India is starting to take the baton, grow faster. It's a large market. They don't have the purchasing power that actually you have in China, not nearly as mature, but that should help out. But nonetheless, China's a tough market for Apple, and they're inextricably tied to China because of the supply chain as well. And so you can't even replicate their supply chain.
And we point out Apple's only down 0.1% on that news of the data point. This last week's been fascinating. We have been talking about Apple a lot on the show in the context of antitrust, DOJ suit, but also what came out of Europe with the DMA probe. And for the first time, I'm thinking back to last Thursday, the stock falling 4% on a DOJ suit, investors seem to be saying, wow, there is actually a real antitrust problem or risk to the stock here. Is that a concern you share?
Yeah, for a couple reasons. And it's not just the suit that the DOJ brought against Apple. I know the stock reacted to that, or the digital market case in Europe. But it's also the Google TAC case on search. You know, Google pays somewhere between $20 and $25 billion a year to Apple. That is 100% gross profit that drops to the bottom line. So it's no surprise they actually potentially are doing a deal with
gets
Gemini.
a lot of praise on his bottom line management as well, so it's a pressure point.
Exactly. So I think you got to look at it from both angles. It could, that could be bad for Apple. It could actually be good for Google because Google doesn't have to pay as much TAC for that placement on the iPhone. But for the first time, what you're seeing is the DOJ go after and say, like, look, it's all right to have a monopoly. It's not all right to exercise abusive power with that monopoly, and that's really what the government's saying. The thing that's interesting about it, though, is as a consumer, you actually opt into that monopoly if you buy an iPhone. And so in some ways, you could argue Apple's case on that side of the ledger is actually pretty strong versus compare that to the Google case where it's default on an Android device and then they're forcing you in to the Google Play Store. That doesn't seem as valid as what Apple should be able to do, given what it's provided to consumers and the benefit that they get.
I think what we've talked about is the idea that whether it's the suits or the regulatory action, they want Apple to basically signpost to consumers. You can go elsewhere if you want outside the ecosystem. Denny Fisher, Janice Henderson, you are able to discuss so many corners of this technology market. We love having you on the program. Now, coming up on Bloomberg Technology, Alibaba pulls its planned IPO for its logistics arm. We're going to bring you those details next. Pretty flat, though, on the US ADRs of Alibaba. This is Bloomberg Technology.
Sources say OPEC Plus is unlikely to change output policy before the June meeting.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Alibaba is calling off an initial public offering for its Sanao logistics arm, which had been a much anticipated debut that could have raised more than $1 billion. For more, let's bring in Bloomberg's Isabel Lee out of New York. The big question is why they've pulled the IPO.
Why? It's really just because of poor market conditions. As the stock waned, the company lost interest. As we know, the Hong Kong and Chinese stock markets aren't doing so well. But we have no indication for now that they will list elsewhere. But this also doesn't mean, Ed, that Alibaba won't be reviving this IPO soon. So they filed for paperwork in September, and Tuesday marked the end of that 6-month period in which they had to update it. And so they said, nope, we're pulling out. But instead, they're going to buy out all the remaining stock held by employees and investors for $3.75 billion. So that's instead what they're doing. And of course, we have Alibaba chairman Joseph Tsai saying that, this is an appropriate time to double down on Alibaba's investment in Tainao. So for now, they have around a 64% stake, and soon after that, it will be 100%.
There's been some inconsistency on what is or what is not happening with the spinning off of various listings. So now is important, right, as the logistics arm. Market conditions are one thing, but how surprising is a kind of U-turn on a decision for a major financial transaction?
I think it's surprising, but not that surprising, because this isn't the first high-profile IPO that Alibaba nixed. They also, in 2023, halted their $11 billion IPO of their cloud arm, and they also halted the IPO of their grocery unit, which is Freshippo. So this is going to be the third that we know of or that we're talking about. And it's really interesting because remember last year, everyone made a big deal about the historic shakeup of Alibaba in its 25-year history. Suddenly, the company came out and said, you know what, we're going to break up into 6 baby babas, as Tim Kalpan of Bloomberg Opinion said. But we haven't seen any of that. We have Bloomberg Intelligence saying that instead of seeing this play out, we're seeing a retraction. And we don't know how this will play out in the future. A lot of people were looking to this as a blueprint because Alibaba is often seen as a barometer of the Chinese economy, being one of the biggest companies in China. So they were like, we'll see if this will work out. But for now, no signs yet.
Bloomberg's Isabel Lee, thank you very much. Okay, sticking with corporate news. WeWork co-founder Adam Newman and financing partners submitted an offer to buy the bankrupt company for more than $500 million, according to a representative for his real estate company. Bloomberg's Max Chafkin joins me with the details. Adam Newman and a consortium are trying to buy bankrupt WeWork for $500 million US. Explain.
Yeah, I mean, Adam Newman, of course, former CEO of WeWork, left the company after taking it to kind of dizzying heights, a valuation that was, thought to be, close to 50 billion at one point. Now, of course, the company is bankrupt. Adam Newman, very good salesperson, has a lot of respect from at least some investors in Silicon Valley who are willing to sort of look past, some of the missteps with WeWork. He also just clearly, loves this company, right? I mean, he was very invested in this spiritual idea of WeWork, and we live. There's all this additional stuff. So now it's like he's saying, we back.
We back. Max Chafkin, my goodness. When WeWork filed for bankruptcy, it did so with $19 billion of liabilities. And I think that there are probably many questions, many more than answers right now. But do we have a sense of how Adam Newman is going to finance this, his plan for WeWork version 2.0, 3.0, 4.0, whatever the version it is that we're at now?
Okay, well, I mean, I think there are basically two options. One is, the core of WeWork's business was pretty straightforward, right? Finding offices, signing leases, and then dividing them up and reselling them. Now, part of what happened here is that they expanded too quickly. They raised huge amounts of money from SoftBank. Adam Newman was like a master of hype and sort of got ahead of his skis. There's a version of this, right, where you use the bankruptcy proceeding to renegotiate these leases, to get the costs, back in control, and you have a smaller but sensible business. The other option, which I have to think is a possibility given who we're talking about, is, restart the hype train. Adam Newman started this other company, Flow, with backing from Andreessen Horowitz. They've said, they still believe in him. They think he's, a great entrepreneur. So you could imagine some sort of effort to sort of do this thing all over again after, one expects renegotiating, trying to get the costs under control.
Bloomberg's Max Chafkin on Adam Newman's $500 million bid to buy back WeWork, We Back. Coming up, we're going to chat with Drone Up CEO Tom Walker about the launch of what it's calling Drone Up Ecosystem, in the air, on the ground, and in the computer. That's next. This is Bloomberg Technology.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see. I was made to feel pretty optimistic about what we saw in the summer.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Autonomous drone delivery company DroneUp is rethinking last-mile delivery. The startup's unveiled what it calls ecosystem, integrating ground, air, and software products into a single platform. Joining me now with more is DroneUp CEO Tom Walker. And I think where I want to start, Tom, is why go beyond just being a drone company? Why did you need to make a system and a technology that says, here is the all-encompassing last-mile drone package?
Well, thank you for having me. I mean, long, leaders have insisted, industry leaders, that drones are the answer to the last mile problem, but we really haven't attacked it correctly. We've tried to fix it with simply using drones, which is like a transportation company trying to fix a last mile logistics problem by getting a better truck.
Russian Urals and Kebco oil loadings from Baltic ports seen at 2.2 million tons for April 1st to the 10th.
That retailers can get the product onto the drones quickly and efficiently, and also be able to deliver to those 100 million plus Americans who don't live in single family homes and don't have yards or porches to deliver to.
We're showing video of how the system works, right? You load your package into the ground unit, the drone lands, the package is raised up and attached to the drone, and off you go. It seems simple. Who's actually going to be using this, Tom? Do you have any signed up customers?
We do, but what we've done with our customers is that we're going to allow them to have the moment. We're going to be rolling both this and our next generation drone out in the next quarter. We're going to be in some top retailers, top convenience, and top quick service restaurants. I'd say stand by for the announcement. We're going to allow them to make those announcements because we believe it's a big leap forward for them and an opportunity to utilize our technology. But it's coming next quarter.
Okay, well, Tom, I'm sure our Bloomberg Technology audience wouldn't mind you sharing with us those names, particularly on the QSR side. So give me a sense of how quickly you can scale this. I've done a lot in Arkansas, for example, about what Walmart was doing with Zipline in the last mile context, but that is a small scale pilot, and they often are small scale pilots. Convince me and our audience that this can be real in the real world at scale.
Yeah, so our technology is integrated from our airspace management that manages the airspace to the ground infrastructure that auto loads. Powered behind it is a very sophisticated logistics system that ensures we get the package you want, when you want it, and where you want it. Each of this units, this DBX technology that we created, is like an Internet of Things. All it requires is power. So you set it in, it's smaller than a parking space, it powers on, and within 15 minutes, it's part of the ecosystem. And so drones move throughout the ecosystem autonomously and are able to heat surge demands here and decrease demands in other areas. Again, 74% of the cost and labor of drone operations or drone delivery operations is labor. This system essentially eliminates that labor, both on the pickup side and the delivery side. And so if you're going to bring those costs down, you have to start by eliminating labor. And remember, this configuration you're seeing here is just one. It could be on a roof. It could be integrated with a fulfillment system. It will scale very, very quickly because it creates a more affordable approach.
All right, DroneUp CEO Tom Walker, come back when you're ready to announce those customers. Thank you. Now, coming up on Bloomberg Technology, Starlink's effectiveness as a comms tool is making the satellite internet service a target for a growing black market trade. We bring you the Bloomberg Big Take and some key reporting. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife and I. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show, now weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Today's Bloomberg Big Take. Elon Musk Starlink's terminals have hit the black market. A Bloomberg News investigation has identified wide-spanning examples of Starlink kits being traded and activated illegally in countries all around the world. Here with more on the story is Bloomberg space editor Eric Johnson. The big take in the investigation identifies a number of countries, many of them areas of conflict where this is happening. Illegally obtained Starlink ground receiver being activated. Bring us the details.
Yeah, absolutely. Starlink's growth around the world has made it, an invaluable resource for, regular people, myself and others who just need high-speed internet. But it's also because of how easy it is to use and its widespread availability has, fallen into the hands of in war-torn regions where there's no operations agreement between the company Starlink and the government there, and also in places that are under U.S. sanctions, such as Venezuela and other nations.
Eric, I want to point out to our audience that SpaceX did not respond to our requests for comment on the story, and of course they were invited to comment and to discuss it. They did say back in February that were they to obtain any knowledge that a Starlink terminal was being used by a sanctioned or unauthorized party, that they'd investigate the claim and then take actions to deactivate that terminal. In our reporting, do we have a sense of how pervasive this is, the scale at which the illegal use is happening from a numbers perspective, or is it limited to specific case studies in those countries?
I mean, that was one of the most fascinating revelations for us, is just how widespread this is. I mean, it's being used all around the world. And Starlink and SpaceX and Musk, have said at various times that they will, when a case is brought to their attention, they will investigate it. And if confirmed, they will shut down. They can, we've talked to experts who said they can use geolocating, whenever one of these terminals is activated, they can literally see it. And so they, in theory, could turn it off. It raises questions about, how effective they are at this, where, Musk is this mercurial figure. His allegiances are hard to ascertain. And certainly it raises questions about what who has the power to do this and what authorities are going to get involved, whether that's the U.S. government, whether that's local authorities on the ground in these places, such as Yemen, Sudan, Venezuela. There's been unconfirmed reports of soldiers in Russia using it, which of course is under U.S. sanctions.
Yes.
So, but to your point, this is a widespread problem, and it makes Starlink into this geopolitical wild card that with very uncertain use around the world.
But it's also becoming an increasingly important part of the SpaceX business model, right? I've done some reporting, which you've edited over the last year or so, about the growth of the Starlink business. Just outline its goals and where the growth kind of lays right now for space-based or satellite constellation-based internet.
Starlink is absolutely vital to Elon Musk's business plan. It's going to be a huge percentage of SpaceX's revenue. Musk has said that the launch business itself is capped, but he envisioned Starlink could be a $30 billion a year business. The point of it initially was to, have sort of financial underpinnings and growth to help Musk achieve his lifelong dream of getting to Mars with the Starship rocket. So a crucial funding source for the company, and its growth has mirrored that.
Bloomberg's Eric Johnson, our space editor. Thank you so much for sharing with us the Bloomberg Big Take. Let's get back to the breaking news that we've been covering all morning. We want to head now out to Washington for the latest update on the search and rescue mission that's underway in Baltimore after the Francis Scott Key Bridge collapsed earlier this morning after a cargo ship struck what is a major transportation route. You're looking at live pictures of the Francis Scott Key Bridge, and you're looking at live pictures of that vessel registered in Singapore. Bloomberg's Wendy Benjaminson joins us from DC. What do we know of the search and rescue mission and the U.S. government response? Wendy?
Well, we do know here in Washington that President Biden has been briefed on this and that he is expected to speak in this hour about the rescue efforts and the federal resources that the White House says they are sending to Baltimore and to Maryland to try to help, get this port open again and find any people that might be stuck in the water or elsewhere. Transportation Secretary Pete Buttigieg, I believe, is going to also come to the area to inspect and see what's going on. But this is, as you say, just a major disruption, even if, thank goodness, there seems to be a small loss of life.
Yeah, and our thoughts are with those impacted. I know that the search and rescue effort is underway. Maryland's governor seemed to suggest earlier in media interviews that this was an accident, but this is an important port in the context, particularly of the automotive industry. Is there any sense of the impact, how long this will be disruptive?
Well, there are estimates out there that it could last months, which seems to make sense. If you see from those videos, this was a massive bridge that just broke apart into the Chesapeake Bay there. It is going to be a tremendous impact. There are 21 ships already waiting on the inland side of that bridge that were waiting to go out. There are distribution warehouses on the north end of that bridge for companies such as Amazon, FedEx, Under Armour, Home Depot. I mean, major, companies that people order things from and need to get out. Also, trucks use that bridge if they were carrying any hazardous cargo whatsoever, because they can't go in the tunnel that exists under that bay that you're seeing there. So there are those trucks. I don't know if they're going to have to get them through the tunnel, which risks obviously further accidents. So this is going to take months, certainly days, just even to sort out the scope of the problem.
And we continue to bring you those live pictures and the key updates from the Francis Scott Key Bridge, which collapsed earlier this morning. Bloomberg's Wendy Benjaminson, thank you for your reporting. We'll keep you posted. This is Bloomberg Technology.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Sunshine, a startup that helps users automate mundane tasks, launching a new AI product called Shine. The product includes 2 complementary features for users: a photo sharing app and an events website that can be used together or individually. CEO and co-founder Marissa Mayer joins us now with the details. And there is an AI story here that the platform and technology is able to tell a user, this photo is share-worthy. But how does an AI know what is or what is not share-worthy in terms of a photo that I might post?
Well, as you know, the current state of AI is really very useful and very advanced. And so we can look at your photos. We can look at things like where they were taken, when they were taken, who you were with, or who's in the photos, what's in the photos, how many times did you take that photo? And that all of those signals tell us when you might want to share it with someone else.
Marissa, you've been in the technology industry a long time and you've built companies. Did you decide to build the underlying model for this yourselves, or did you work with a third party using either LLMs or other machine learning technology from a partner?
We do use some of our own technology, but we also rely on incredible APIs provided by some of the large players in the space.
What I find interesting about Shine is who the target audience is. You know, we talk a lot on this program, Bloomberg Technology, about the creator environment, creator industry. Is that who principally you have in mind, or are you targeting a much broader audience of user who may just want to share photos with family or friends or whatever it may be?
Well, the reality is that photo sharing is really broken, and it's broken for everyone. It's broken for creators and all consumers. And so we really are focused on how do we help people remember to share the photo, remember to get the photo, and just make it easier to do that. And also we are working with people who throw events and put things together in terms of organizing parties, trips, etc. And so our shine.sunshine.com allows you to do invited, more formal events, but the app Shine works for everything. Road trips, parties, just simple hangouts.
That brings us to the event portion of this that we spoke about in the intro. So I have the ability to run my photos through the AI and it will tell me what I want to share. Now explain the event portion to me and how they work hand in hand.
Sure. Well, the photos portion essentially assembles albums, and those albums are based around events. They might be informal events, but they can also be formal events, because we know that some of the most important photos for people are taken at formal events, weddings, parties, conferences. And so our website offers that kind of event organization. So it allows you to create stunning invitations. We use generative AI to do this. We have fast and fluid communication, so RSVPs, as well as different updates and messaging between host and guests is easy. And the way these work together is that the photo sharing is built in from the beginning. And what that means is once you've RSVP'd to an event, you're already joined to that shared album. So if you have the Shine app, it's very easy for you to contribute your photos to that event, as well as get photos from other attendees.
Marissa, you are building an AI company and launching an AI product at a time where we're just micro-focused on AI as an industry. In November, you were very open and very critical about what happened with OpenAI and that the then structure of the board on social media, for example. This is the first chance we've had to talk since then. What's your assessment as a long-standing member of the technology industry of the resolution OpenAI reached, the makeup of its board, its promise to grow the board?
I think that overall it's been a great step forward. I think I became very concerned just about the overall governance model. And because this is a fast-moving industry and there are so many people very focused on it, I think it's really important that the major players are governed well. But I think that the new board that they've assembled is excellent, and I think that it seems to be very promising in terms of the direction it's going.
There were reports at the time, Marissa, that you had been approached or sounded out to be a member of OpenAI's board. Was that the case, and would you be interested in joining that board?
I already serve on a few boards that I'm very excited about, Walmart and AT&T. And in my day-to-day, I'm very focused on Shine. So I'm obviously very interested in AI, but nothing to report it there.
All right, Sunshine co-founder and CEO Marissa Mayer talking to us about Shine. We're grateful for your time on the program. Thank you. Now, coming up, we're going to be joined by Danny Garcia, the powerhouse behind some of Dwayne "The Rock" Johnson's biggest brands and businesses. That conversation coming up next. This is Bloomberg Technology.
So the Fed makes no bids for this 5-year note auction.
Still, it's.
And I mean, let's talk about the fundamentals of the company relative to where it's trading right now. Obviously, it is down significantly, meaningfully from, of course, what we saw in the peak of the pandemic bubble, if you will. Where's fair value for a name like GameStop at this point? It's currently trading just below $15.
When you've got negative profit margins, as we see, it's really difficult to see this as being anything more than zero. This was on our zombie stock list, and we took a really nice gain on that list, and we pulled it off because they were harvesting the balance sheet.
David, I'm sorry to cut you off, but it looks like President Biden has come out. We want to take you now to Washington.
I want to speak briefly about the terrible incident and accident that happened in Baltimore this morning. At about 1:30, a container ship struck the Francis Scott Key Bridge, which I've been over many, many times commuting from the state of Delaware, either on a train or by car. I've been in Baltimore Harbor many times. And the bridge collapsed, sending several people and vehicles into the water, into the river. And multiple U.S. Coast Guard units, which are stationed very nearby, thank God, were immediately deployed along with local emergency personnel. And the Coast Guard is leading the response to the port, where representatives from the Federal Highway Administration, the FBI, the Department of Transportation, the Army Corps of Engineers, as well as Maryland officials and Baltimore Police and Fire, are all working together to coordinate an emergency response. Officials at 8 people were unaccounted for were unaccounted for. That number might change. 2 have been rescued, 1 without injury, 1 in critical condition. And the search and rescue operation is continuing for all those remaining as we speak. I spoke with Governor Moore this morning, as well as the Mayor of Baltimore, the county executive, both United States senators and the congressman. And my Secretary of Transportation is on the scene. I told them we're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together. Everything so far indicates that this was a terrible accident. At this time, we have no other indication, no other reason to believe there's any intentional act here. Personnel on board the ship were able to alert the Maryland Department of Transportation that they had lost control of their vessel, as you all know and reported. As a result, local authorities were able to close the bridge to traffic before the bridge was struck, which undoubtedly saved lives. Our prayers are with everyone involved in this terrible accident and all the families, especially those waiting for the news of their loved one right now. I know every minute in that circumstance feels like a lifetime. You just don't know. It's just terrible. We're incredibly grateful for the brave rescuers who immediately rushed to the scene and to the people of Baltimore who want to say, we're with you. We're going to stay with you as long as it takes. And like the governor said, you're Maryland tough, you're Baltimore strong, and we're going to get through this together. And I promise we're not leaving. Here's what's happening now. The search and rescue operation is our top priority. Ship traffic in the Port of Baltimore has been suspended until further notice, and we'll need to clear that channel before the ship traffic can resume. The Army Corps of Engineers is on the spot and is going to help lead this effort to clear the channel. The Port of Baltimore is one of the nation's largest shipping hubs, and I've been there a number of times as a senator and as a vice president. It handles a record amount of cargo last year. It's also the top port in America for both imports and exports of automobiles and light trucks. Around 850,000 vehicles go through that port every single year, and we're going to get it up and running again as soon as possible. 15,000 jobs depend on that port, and we're going to do everything we can to protect those jobs and help those workers. The bridge is also critical for travel, not just for Baltimore, but for the Northeast Corridor. Over 30,000 vehicles cross the Francis Scott Key Bridge on a daily basis. It's virtually, it's one of the most important elements for the economy in the Northeast and the quality of life. My transportation secretary is there now. As I told Governor Moore, I've directed my team to move heaven and earth to reopen the port and rebuild the bridge as soon as humanly possible. And we're going to work hand in hand with the support of Maryland to support Maryland.
At 1 p.m.
whatever they
Eastern
ask
Time,
for.
the US sells
We're gonna work with our
$67 billion
partners in
in
Congress to make
5-year
sure the
notes,
state
prior
gets the
bid cover
support
of
it needs.
2.41 and a
It's my
prior high
intention
yield of
that the federal government will pay
4.32%.
for the
And
entire
taking a look
cost
at
of
some analyst
reconstructing that
notes,
bridge.
despite declining yields since the last
Congress
auction,
to
JP
support my
Morgan
effort.
strategists point to
It's
cheap
going to take some
valuations
time.
and the
The
Fed
people of
using
Baltimore can count on us,
cyclicals
though,
as
to stick
supportive
with them
factors
at every
that
step of
will
the
see
way
the auction
until the
digested
port is
smoothly.
reopened and the bridge
Primary
is
dealers'
rebuilt.
position in the 3 to 6
You
year
know,
sector was
we're
net
not
long
leaving until the stop is
$53.1
done.
billion
We're
in the
not leaving
week
until
ended
then.
March
So
13th
I just want to say
versus
God bless everybody.
$42.6 billion average over the
Everyone
past
harmed this
year.
morning and their
Latest
families.
CFTC
And may
positioning
God
data
bless the
shows
first
speculators
responders,
were net
many who
short
risk
more
their
than
lives.
1.15
And
million five-year note
the reason
futures,
I'm
a
not going to
possible
take a lot of
source of
questions,
covering
there's
demand at the
remaining
auction.
issues that are open that we got to determine what's going to happen in terms of the rescue mission and the like. But
Do you plan to go to Baltimore, sir? And if so, how quickly?
I do, and as quickly as I can. That's what we're
You said the federal government's also going to pay for the repairs. I'm just curious, this was a ship that appears to be at fault. Is there any reason to believe that the company behind the ship should be held responsible? And then also, you
that
mentioned
could be, but we're not going to wait for that to happen. We're going to pay for it to get the bridge rebuilt and opened.
What did you make of Israel's decision not to attend this meeting this week?
Oh, I don't want to get into that. We've got plenty of time to talk about Rafah.
You mentioned the port. Can I ask about cars? About the port.
All right, and that was President Joe Biden speaking following the collapse of the Francis Scott Key Bridge in Baltimore. To go through some of the headlines, what we heard from President Biden, he said that they're going to send all the federal resources that Baltimore needs at this point, that we're going to rebuild this bridge together. He directed his team to rebuild the bridge as soon as possible, and that the federal government will pay the entire cost of rebuilding that bridge, something that he expects Congress to support when it comes to funding that effort. He also did say that they need to clear that channel before ship traffic can resume. They're going to try to get the Port of Baltimore running as soon as possible, but President Biden did stress that search and rescue operation is our top priority at this point. A quickly moving, quickly developing situation. Of course, we're going to bring you all the latest as soon as we have it. We do want to switch gears now, though, because it's time now for our Wall Street beat. And today, we're taking a look at Larry Fink's warning to the U.S. economy. In his annual letter, he wrote in part, "It's no wonder younger generations, millennials and Gen Z, are so economically anxious. They believe my generation, the baby boomers, have focused on their own financial well-being to the detriment of who comes next." And in the case of retirement, they're right. Joining us now for a breakdown is Bloomberg's Catherine Doherty. So that's one sampling of it, but what was the main message of Fink's letter?
It's really rethinking of retirement. We have folks that are out in the workforce, they're working longer and they're also living longer. So Fink is saying we need to rethink how we're saving for that time, how we get and engage the younger generations so that they're putting their money to work. And he's really emphasizing the strength of the U.S. capital market to do this, to basically prepare for that moment. So even if you are keeping the age of retirement at 65 and you're not asking folks to keep working necessarily longer than they have to, but make that choice and also be prepared financially and be able to live past.
Israeli official says hostage talks with Hamas are at a dead end. Israel's negotiators packed up and left
That,
Doha.
of course, his comments on the retirement crisis, of course, a direct quote from that letter. He also talked about, when it comes to the U.S. economy, this idea of snowballing debt. What exactly did he mean by that?
Yes, absolutely. That this debt problem is not one that's going to go away. We need to actually address it. We need to start chipping away. And that he also emphasized that the U.S. debt is not an instrument that folks are necessarily going to keep buying. Right now, with interest rates higher, there is an incentive to invest in longer dated treasuries, but that might not always be the case, especially if we do see the Fed bringing rates down perhaps at the end of this year or in the future. And so he is saying that this debt problem is not one that we can ignore.
At 1 p.m. Eastern Time, the US sells $67 billion in 5-year notes, prior bid cover of 2.41 and a prior high yield of 4.32%.
It's interesting. He did say that the debt situation, it's more urgent than I can ever remember, but he also said that a debt crisis, it's not inevitable necessarily. So it wasn't all doom and gloom.
No, when talking about the debt market, I think that he's emphasizing that there is strength and that he's not referencing any cracks, but that it's something that needs to be talked about and one that is urgent and it cannot be ignored.
All right, Catherine, always great to catch up with you. Really appreciate you breaking down, of course, Larry Fink's annual letter. Our thanks to Bloomberg's Catherine Doherty. And, of course, in just a couple minutes, we're going to hear directly from Larry Fink when he joins Bloomberg TV and radio live at the top of the hour. Of course, before we get there, we'll take a quick check on the markets right now because it is an up day in the equity market. You can see the S&P 500 quietly rallying up about 0.2%. Same thing if you take a look at the NASDAQ 100, up about 0.2 as well. The U.S. Treasury 10-year yield, it's unchanged. No debt crisis there at this moment. The 2-year Treasury yield currently down about 2 basis points. But that does it for our program. I'm Katie Greifeld. This is Bloomberg Markets, and this is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Treasury when issued, 5-year yield 4.245% before the $67 billion auction.
Make that David Weston on Bloomberg.
For our Bloomberg audiences worldwide, I'm David Weston. We're delighted to be joined right now by BlackRock Chairman and CEO Larry Fink. So, Larry, welcome. It's good to have you here on the day of your annual Chairman's Letter to the investors. And it's a bit of a different, I think, letter from what you've done before. Personal. Starts with your parents.
Right.
And they're saving for retirement.
Yeah.
And includes your grandkids as well.
Yes.
The retirement crisis. Give us your diagnosis of that problem right now.
Well, it's something I've been writing about for years. But I emphasize it in this letter. And, you know, all my letters have been based on some long-term issues. And let me be really truthful about my letters. My letters are a reflection of my conversation with clients. So it is, and so over the past year, I heard more and more conversation about retirement, the retirement crisis, from many parts of the world, from middle-class developing countries to developed countries. The acute problem here in the United States is that we have still 57 million Americans who don't have any savings or any retirement plan. Social Security is a fantastic foundation for retirement, but if that's all you have when you retire, you're going to be living in poverty, below the poverty line, because it just is not, it's supplemental, but it's not meant to be the totality of what you have in a retirement. And the whole concept of we're aging, we're all living longer. And I think one of the big narratives I've had to reflect in 2023 was the miracles of medicine. When we talk about the drugs like Ozempic and all the different weight loss drugs, how that is extending life. It's conquering kidney disease and liver disease and heart disease and joint disease.
2.41, 2.41, high yield at 4.235%, 4.235%. The US sells $67 billion in 5-year notes and awards 81.56% of bids at high. Primary dealers take 12.73%, direct 16.81%, and indirect 70.45%.
Was based on statistics that were created 50 years ago, whereby most Americans retired between 60 and 62 then, but most Americans then passed away at 67. And today, statistically, a couple 60 years old in good health, one of them is going to live over 90. And so the other question is, should we reevaluate how we work and how long we
US
work?
Treasury yields fall after auction. 5-year yield up 0.2 basis points on the day at 4.235%.
Most people find purpose, obviously, maybe with their grandchildren, their children, their community. Many people find purpose in their jobs. And the thought of retiring at 60 with 30 more years or a 30-year life in front of you, we need to have a dialogue. We need to have a conversation. And, I'm an optimist. I am very optimistic about the long-term vitality of our markets. I'm bullish on capitalism. Right. The reason why I'm bullish is that when I read the newspapers every morning and listen to Bloomberg and other news organizations, it's full of scary things. We talk about the problems. Yeah. We talk about all the problems in life. But we solve problems through conversation. Right. And the one area where we have no conversation is the affordability of retirement and the whole concept of retirement. And we need to start a global and, most importantly, a national dialogue.
So in your letter, you have a very powerful, I think, diagnosis of the problem. Not just the United States, but globally.
Yes.
We're living longer. We need more money, therefore, to live. At the same time, there's also a bit of a pan there to capitalism, and particularly capital markets, and the extraordinary things they've done, what they can do. Connect the two of those up. Could we use the capital markets to address at least some of the problem we're talking about? And let me be very specific. Social Security, you mentioned, is really in trouble. Should we be taking the Social Security Trust Fund, what's left of it, and put it into capital markets?
We need to put it in a long-term investment. I mean, we have a system of pay-as-you-go. Okay, there are other countries like Australia that have a whole unique system whereby you're contributing. But right now in Congress, there are a number of senators and congressmen are talking about rehabilitating our Social Security pool and maybe contributing a big block of money into it so it has sufficiency. But to me, as I said, Social Security is just a foundation of retirement. We need to really educate our citizens about the need for savings. We see worldwide, most people who are really thrifty, they keep most of their money in a bank account. Like in Japan, there's a high savings rate of 18%. Most of that is in a bank account. In Europe, there's a high savings rate of 15-ish%. Most of that's in a bank account. That is not going to provide you with the adequacy of the compounding of what capital markets can do. But probably one of the big conversations I've had with so many political leaders is the connection of retirement and the capital markets. When you think about the vitality of the U.S. capital markets, so much it's based on the long-term money of pension funds, of our, whether it's a defined benefit plan or a defined contribution plan. And Americans are more optimistic, and so we have a higher investment in equities beyond any other society. And so in my conversation with many political leaders, as they think about retirement, and Japan is a great example, the Kishida government just this past October raised the amount of tax deductibility to put in your 401k. They doubled the size. And it's not a coincidence that the Japanese equity market since October is up 30%. And it's because we're seeing more and more money that is going into the long-term capital markets. So not only does it give financial returns for those who are retiring and saving for retirement, but it's a big foundation for domestic companies to have local investing in your own companies. If you look at the United States, our equity markets generally traded at 2 to 3 PE ratio higher than any place in the world. Now, you could argue we have better companies than any other place in the world, but you could also have to attribute this to that we have a larger retirement system in terms of what we invest in. Now, that doesn't mean we need more. We need more money for more people to be putting it into their system.
Take it a step further, because something you're very involved in at BlackRock is alternative investments.
Yes.
The private markets,
yes.
Credit, debt, things like that. Should we be changing the rules so we can put our 401ks or our IRAs into private markets?
I believe there are some great areas of private markets that are going to be great investments for retirement, and I would channel that more towards infrastructure, because infrastructure has a long maturity, it has a higher coupon, but it has a lower profile of returns than what I would say other areas of the private markets. So it has a good corridor of returns, but higher probabilities of meeting those returns. And so, yes, we need to be re-looking at how we think about investing, whether that is going to be in private equity or infrastructure. I do believe we need to be putting more long-dated assets into retirement, and so that you could meet the returns that you need to have the pool of money that you require during retirement.
Something else you mentioned was our longevity, which has increased substantially. We all benefit from that.
That's a blessing.
Good thing.
Exactly.
I'm not complaining. At the same time, should we be encouraging, as you suggest in your letter, people working longer? Should we make it possible, facilitating that? Should we, frankly, increase the age for Social Security?
That is not for me to make a decision, but I think we need to have a conversation. Look, you and I are the same age. Okay, we are working longer. We find purpose in what we do. The founder of Bloomberg, Mike, is still working. I believe for those who can and they find purpose in work, my gosh, work as long as you can. If you find blessings, if you find purpose in other things, do that. But I do believe we need to discuss these opportunities. I don't think the average citizen knows that, the extent of how much longer we're going to be able to live. So the beauty and the miracles of medicine has allowed us to live, 10, 15, 20 years longer than 2 generations ago. And so, but we haven't changed our system of retirement or our system of Social Security. So the most important thing we need to do, David, is have a conversation. And through that conversation, I think most people are going to elect to do things, maybe working longer or electing to be more involved in how they put their money to work for retirement.
As I say in your letter, you talk a lot about the success of the capital markets, all that they've accomplished. At the same time, you do mention the problem with particularly U.S. debt. You think it's more urgent than any time I think you said you can remember in your lifetime. Put those two things together. To what extent has the success of the capital markets come specifically because we've taken more debt on the public balance sheet? We've shifted debt from private balance sheets to public balance sheets.
No question. Let's just use a statistic, and I think when I talk about this statistic, I get frightened. In the year 2000, the U.S. deficit was $8 trillion. Today it's $34 trillion. So 23 years later, we increased our deficit by $26 trillion. So for the first 40 years, we increased our deficit to $8 trillion, and in the last 23 years, we increased it by $26 trillion. I think that speaks volumes of what's happening in our country today. The problem with these type of deficits is, and now and I believe higher interest rates for longer, the cost of financing our deficits are going to erode more and more of our disposable income as a country. And I do believe we're getting to a point where our public debt is going to start crowding out private capital, and we're going to have structurally higher interest rates.
What can the private sector do to trigger some action in that regard? I mean, you're the head of the largest asset manager in the world, Larry Fink. It's not just you, but you have some influence. At this point, we have candidates running for president who aren't even talking about this subject.
It's not even a conversation. So in my letter, I talk about the need for more public-private investments. Well, the United States is one of the last countries where we've had private capital investing in our infrastructure. And I believe if we changed our policies, privatized our airports, and privatized maybe our ports, and having private capital investing in that, then our public spending could be rededicated to more urgent social needs, more urgent needs, elevating our education, elevating, our issues around Social Security and healthcare. And so I believe the need is to rethink what is the role and responsibility of the public sector for the development of better 21st century infrastructure. We know that we are going to have to digitize our entire economy. We know we're going to have to move forward on decarbonization. These require huge pools of money. Allow the private sector to be part of that. We have this enormous functional capital markets that can provide the capital. We as a country must use it more often and access the role of private sector. And so I think we still
Longer-dated U.S. Treasury yields turn negative, 10-year yield down 1.5 basis points at 4.238%.
Issues. And I would say, and my letter speaks about it, we need to grow our economy so our deficits are a smaller component of our GDP. That is the bigger issue. If we continue to just grow at 2% and we have these type of deficits, that's when the deficits really are going to be a problem out 5 and 10 years.
But you suggest 3%. Is that realistic?
That has to be our target. We need to find ways of growing at 3% instead of just cutting taxes, or we need to find ways of incenting private capital to be investing more. We need to encourage growth, and we need to be, and this is a debate now, and there's a lot of people talking against this, we need to embrace our capitalism, because our capitalism has shown to be the best economic force in the world.
And finally, Larry, let's go back to the personal here for a moment.
Yeah.
As you mentioned, you and I happen to be exactly the same age.
Right.
We're boomers.
Yes.
We have some responsibility to the succeeding generations that I'm not sure we're delivering on. How much of your letter was really saying to us boomers, we owe it to our children and our grandchildren to get our arms around these problems?
when we were born at a great economic moment. We all have a responsibility to try to recreate that environment for our grandchildren and hopefully make a better outcome for our children. But now, at our age, we've got to be focused on the future for our grandchildren.
Okay, Larry, thank you so much. Really great to have you here. That's Larry Fink. He's BlackRock Chairman and CEO. Joe, back to you.
David Weston, thank you. A fascinating conversation, having read Mr. Fink's letter this morning, and something that we were looking forward to, recalling the conversation that we were having here in Washington about the retirement age just days ago. And
shortly expecting the Fed reverse repo operation.
With us here, along with Brad Howard, as we dig into the politics of this, recalling the conversation about Social Security in the budget that emerged, Rick Davis, from the Republican Study Committee. Highly controversial. It actually addressed the issue and recommended increasing the age for retirement. This is something that neither presidential candidate will touch right now. We're going back to the old lockbox here. Is it time to start having this conversation out loud?
Well, you kind of started that conversation at the presidential level when you interviewed Nikki Haley this primary cycle and got her talking about Social Security. And the bottom line is, I think what Larry Fink points out is just a fact. Americans are living longer. We're being more productive in that old age. Medicine has given us, a new chance to extend our lives. And yet public policy isn't following any of that. And
73 counterparties take 496.062 billion at the Fed reverse repo operation.
It is on the brink of being a financial disaster, and yet presidential candidates Donald Trump and Joe Biden seem to feel like it's some kind of toxic third rail that you can't talk about in politics, and you'd be a disaster if you did. And I think Americans are more sophisticated than that. And I think a national dialogue is exactly what Larry Fink is calling for, and I think it's a smart move on his part.
With the Democratic view, Brad Howard, in our remaining moment in this conversation. Brad, we've got an 81-year-old president. All we do is talk about age around here in Washington, D.C. How come we can't have this conversation?
Well, look, the criticism isn't that we're having the conversation. The criticism is that the Republican proposal immediately makes seniors bear the burden of the bad decisions of Washington. And I think Democrats want to look at it more holistically. Like there's ways you can tax the wealthier to help ensure the longevity of the Social Security Trust Fund. There's other mechanisms like why are millionaires and billionaires getting Social Security benefits? Those are questions that Democrats are asking. So I think I know the criticism is that they're looking at it from this angle. But let me say, there was a strong momentum behind a bipartisan national commission that would look at the nation's debt, including entitlement spending, which is Social Security and Medicare. It made it through it was the Scott Peters bill. It made it through the Budget Committee on a bipartisan vote. And Democrats were willing to go forward with this. Who killed it was Grover Norquist and the Americans for Tax Reform, because they left on the table the idea of raising taxes to help ensure the longevity of Social Security. So, both sides are to blame here. But again, the criticism is not that they're bringing it up. The criticism is their proposal to do so.
Brad Howard and Rick Davis, our great panel today. We'll have more with our panel straight ahead, live from Washington. We'll also get an update from Bloomberg's Kayleigh Lines. My partner is in the field today. She's in Baltimore, where the bridge collapse took place, and we'll hear from her as well. Much more on the fastest show in politics. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, now weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The advance for the S&P 500 and the NASDAQ Composite Index approaching 10% for the year. After a two-day pullback, stocks today, they're advancing. The NASDAQ could be on track for another record close. Best performing stock in the S&P 500 right now. That belongs to McCormick. Those shares up about 11% after delivering an encouraging sales update. Worst performing stock is United Parcel Service. Those shares, they were down about 6.7%. Their revenue target beat estimates, but Wall Street analysts were pretty much underwhelmed by the results of the company. Ernie Thrasher, the chief executive officer of X-Coal Energy and Resources, says the collapse of the Francis Scott Key Bridge that we've been covering likely to shut down coal exports for as many as 6 weeks and block the transport of up to 2.5 million tons of coal. And that is just one industry that is affected by this. And then you have Trump Media and Technology Group. Those shares 45% higher the first day of trading on the NASDAQ. And betting against the former president's social media startup, one of the most difficult and expensive short trades right now in the market. This according to the financial and analytics firm S3 Partners. Investors tempted to bet against Trump Media and Technology Group, facing annual financing costs to borrow the shares of more than 150%. Right now, the overall market, S&P 500, up by about 10 points, a rise of 0.2%, 52.27 on the index. The Dow Jones Industrial Average up 78 points. That's a rise of 0.2%. We're at 39,391. And the NASDAQ Composite Index, 39 points higher. That is up about 0.25%. As we look at treasuries right now, the 2-year yield up 1 basis point. That's at 4.59. The benchmark 10-year yield unchanged at 4.23. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power with Joe Matthew continues right now.
John Tucker, thank you. I'm Joe Matthew in Washington here on Balance of Power with an eye on Baltimore today. Of course, so many of us woke up to news of the bridge collapse that took place around 1:30 this morning. The Dolly, the name of the ship, was on its way to Sri Lanka. It did not get out of Maryland. Of course, it hit the bridge, the Francis Scott Key Bridge, which is a roughly 1.5 mile long span and is now largely underwater. If you're with us on Bloomberg TV, showing you video of that bridge coming down this morning, remarkable. It doesn't even look real, as this took place so quickly after the Dolly lost power and slammed into a pylon on that bridge, taking the entire thing down. It is worth noting Governor Wes Moore, in a news briefing this morning, made clear that bridge was up to code. This may not be an infrastructure story, even if it does lead to another conversation about infrastructure and our bridges around the country that are not up to code. But this is still a search and rescue operation. They're searching for 6 souls still missing. And my partner, Kaylee Lines, from Balance of Power here, has made her way up to Baltimore to the scene of that bridge collapse and joins us now with the latest. Kaylee, what can you tell us?
Well, Joe, this search and rescue effort is still very much underway, and that remains the priority. If you listen to American officials, including Governor Wes Moore, saving lives is their exclusive priority right now, they said. And of course, that effort is underway. There are still first responders transiting the area. We've seen some equipment and trucks and things like trailers moving up toward the remaining parts of this thoroughfare. But of course, as you say, Joe, pretty much the entire bridge is now underwater. Of course, that is what they're dealing with most immediately. But then we have to think about what comes next. We, of course, heard from President Biden just over an hour ago talking about how he would like the federal government to provide the funding to reconstruct this bridge. The timeline under which that may happen, though, very much in question. The governor certainly did not put a timeline on the reconstruction of the bridge or the reopening of the port of Baltimore when he spoke earlier today. A lot remains uncertain at this hour. What we do know, though, is that companies already who have been using this to get goods in and out for exports and imports already are thinking about diverting those cargoes, be it autos or coal, around the port of Baltimore to other ports like New York in the north or Norfolk and Virginia to the south.
Yeah, we heard Kaylee from the Port Authority of New York and New Jersey, knowing that there's going to be massive overflow here as some ships steer around the port and others try to find new areas of access on the East Coast. Very clearly, the Port of New York and New Jersey is proactively working with our industry partners, it says, to respond as needed and ensure supply chain continuity along the East Coast. Kaylee, we've learned a lot about that bridge today and a lot about the Port of Baltimore, the largest port in the country for autos and also an extremely important artery for coal. We were just hearing from John Tucker that coal shipments could be shut down for as many as 6 weeks. The economic impact here could be huge.
Yeah, Joe, that's absolutely right. We were talking about millions of tons of coal that was exported from the Port of Baltimore last year. Actually, in 2022, it represented about a fifth of exports in total being handled by this port. So that's just one example of an industry that could be very much disrupted by today's events. Autos, as you mentioned, another. For 13 years in a row, the Port of Baltimore has handled the most in terms of the numbers of cars and light trucks being handled by any port. It was near 850,000 vehicles last year. So already Ford, General Motors talking about diverting those transits to other ports, like we've mentioned. The port authorities in New Jersey and New York, for example, could be getting prepared to handle those extra cargoes, work on their capacity. But of course, Joe, it also raises questions considering this is effectively a road, a transit on I-695 that has been disrupted, about ground transport as well. We heard from a trucking association earlier that said 4,900 trucks, commercial trucks per day cross this bridge. And that's not even considering the 35,000 commuter vehicles that crossed it daily, about 11 million vehicles a year in total. And it's going to create some serious gridlock as cargoes have to be diverted, trucks have to be diverted, and commuters have to find other ways to get around the state of Maryland and the surrounding areas, keeping in mind that anything hazardous material cannot go through the tunnels. So we're talking, for anything carrying hazardous material, potentially 30 miles being added to the journey because they can no longer go over this key bridge that has collapsed.
Just great information, Kaylee. We're lucky to have you there. Bloomberg's Kaylee Lines with us live from Baltimore, where the bridge collapsed this morning. And Kaylee is right, 695. This is a very important road. It's not just the bridge itself. That highway actually comes right down here to Washington, which is why I drive on 695 to get to work every day. Let's reassemble our panel now. Rick Davis is with us, along with Brad Howard, as we try to get to the politics of this as well. And Brad, a test for any elected official who is involved here. We heard a short time ago from Joe Biden. He spoke from the White House pledging, as Kayleigh mentioned, that the federal government will pay the entire cost of rebuilding that bridge. But beyond Joe Biden, you've got a young governor named Wes Moore. You've got lawmakers, of course, in Baltimore. All of them will be tested by the outcome. And when you look at this, you were a chief of staff lawmaker for many years on Capitol Hill. It is the scenarios that you cannot plan for that test you in times like these, aren't they?
Absolutely. This is where relationships matter. And I was chief of staff to a Florida member who, as you know, is state prone to natural disasters. And I worked for the mayor of New Orleans, Mitch Landrieu, which is, obviously got its own infrastructure problems. And Mitch Landrieu was the infrastructure kind of director under Pete Buttigieg and recently left the administration. So a lot of experience in this area. But yes, this is when relationships matter. And in particular, the Maryland congressional delegation is very close to Congress and the federal bureaucracy and red tape that are in D.C. because a lot of their constituents work in these buildings and probably use this bridge. So you've got to think that there's going to be a lot of incentive to fix this. And again, not to emphasize the consequences of this event, but it's not just the vehicular and truck traffic. These ships can now not pass through the port of New Orleans until the harbor is cleaned up. That's going to take weeks, and I can't stress the stress that's going to put on supply chain and pricing, et cetera. So this is a really, really big deal that's going to impact a lot of Americans, not just those that use the bridge.
The Port of Baltimore, of course, that we're talking about here. Rick, you've spent a career preparing politicians for any number of scenarios that would be unnatural for most of us, whether it was an elected official or a politician running a political campaign, running for election. How do you prepare an elected official for something like this?
It'll be interesting to see how all this shapes up politically. Obviously, it's a hugely important infrastructure hub of any kind, right? Whether it's the cars going across the bridge or the access to the port, the development that goes on in that region. And you kind of feel for Baltimore, they've had a tough run of it. And I think they were just really getting some growth this last couple of years. And then something like this hits them. I'm looking at this Maryland Senate race. We have a very interesting situation where, former Governor Larry Hogan has entered into the race. Would have been a no-brainer Democratic pickup hold for this cycle, but all indications are that Hogan's currently leading in a pack. There's a tough Democratic primary, and I wonder if Maryland voters are going to look at this and say, gee, maybe it'd be actually a good thing to have a Republican in the Senate to help us plead our case, since we already have a Democrat representing us. And so you wonder, can something like this well past today, well past the search and rescue, which is the priority now? It's not about politics. But when you start thinking about it later on in the year, you wonder whether or not this is something that could drive some votes in Maryland.
As soon as you say that, David Trone on Twitter here, of course, he's in the primary for that Senate race. Thank you to the officials who acted swiftly to stop new traffic on Key Bridge after receiving the Mayday call this morning. So much of this is perception. Brad, I just want to give you a chance to weigh in. We have less than a minute here at this point. How do candidates like a Democrat in the case of David Trone push back on that perception?
Well, I think you've got to be careful when you're a candidate and not a current office holder, because by nature of that position, anything you do is political in nature. And so you want to be careful that your focus remains on the search and rescue with the families that are affected by this, and that you're pledging all these senses you can. But again, you can stress what you would do when you get there, but it's a very careful situation here. And I'll add too that Larry Hogan is leading in the polls at the moment, but I suspect that's because he's a two-term governor who's got a high name ID. I think once the Democrats emerge with their nominee, Maryland is by nature a solid blue state. And if Joe Biden and the new governor there in Maryland, Wes Moore, who I think is a contender for the Democratic nomination one day for president, really work well together, I think they're going to show that Democrats can govern, and that's probably going to help the Democratic case and hurt Larry Hogan in the long term. But a lot of this is very early on. We're just, we're handicapping a race that hasn't quite started yet.
You said it.
We'll see how this emerges.
Absolutely. Brad and Rick, I can't thank you enough for being with us today, dealing with breaking news and some very challenging subject matter with such grace. You always help us understand what's happening in the heat of the moment. Rick Davis and Brad Howard our political panel today. I'm Joe Matthew in Washington. We'll bring you back, of course, to Baltimore a bit later this hour. We'll connect with Kaylee to see what's happening there, and a conversation with Morning Consults about the latest Bloomberg swing state poll. That's next after we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. President Biden is promising Baltimore the government will not abandon the city as it tries to recover from today's collapse of the Francis Scott Key Bridge. It was destroyed after a Maersk container ship ran into one of the support pillars.
It's my intention that the federal government will pay for the entire cost of reconstructing that bridge, and I expect the Congress to support my effort. This is going to take some time. The people of Baltimore can count on us, though, to stick with them at every step of the way.
Maryland officials say they know of at least 6 construction workers who are missing following the collapse of the bridge early this morning. One person did walk away while another person was taken to the hospital. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Nancy Lyons.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the 2 big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Now, women on average have about a 30% lower, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Choose Bloomberg. Great question.
Great question. That's a question I get all night.
Bloomberg. Top experts. Great questions.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Green on the screen right now. Stocks are moving higher after we saw 2 days of losses for the major averages. Apple planning to kick off its annual Worldwide Developers Conference. That comes on June 10th, when the company is expected to unveil its long-anticipated artificial intelligence strategy. The iPhone maker announcing the timing today. Right now, the shares of Apple, a little change. In the S&P 500, you have 7 of the 11 major industry groups. They are higher. Communication services, that's the industry that's in the lead right now, and that's where you're going to find shares of Google parent Alphabet up over 1%. McCormick, the leading stock, the leading gainer in the S&P 500 right now, it is up over 10%. The spice maker delivering an encouraging sales update. And on its first day of trading on the NASDAQ, Trump Media and Technology Group shares, they are up 44%. And it's worth noting that the short trade for this stock is now the most expensive stock to bet against. In part, that is because there's a tiny number of shares available to borrow and strong interest in betting against the company. Right now, the S&P 500, 10 points higher. That's up 0.2%. We're at 52.28 on the index. The Dow Jones Industrial Average, 83 points higher. That's up 0.2%. 39,398 on the index. And the NASDAQ Composite Index, 46 points higher, up 0.3%. Balance of power continues right now. Here's Joe Matthew.
Thank you, sir, and welcome to the Tuesday edition of Balance of Power. I'm Joe Matthew in Washington. Normally, I would say alongside Kaylee Lyons, but Kaylee is in Baltimore today, having responded to the bridge collapse this morning. And we want to bring you up to date on what is happening there, because the administration is now responding. It's not just local officials. We heard from Joe Biden live here on this program just within the last hour, pledging that the federal government will pay for the bridge replacement in full. They will not wait to find out who was at fault or whether the shipping line is liable in this case after the Dolly lost power, that cargo ship, and slammed into the bridge, bringing it down. Most of that bridge is underwater right now, and Kaylee joins us from the scene. Kaylee, we understand the Transportation Secretary is on his way there today.
Yes, we do expect, Joe, that Secretary Buttigieg will be coming here to view the scene, to partake in the efforts, which, of course, right now is still a search and rescue effort as we speak, at the invitation of Governor Wes Moore. We have not yet seen the Secretary arrive, but, of course, we'll keep all on Bloomberg Television and Radio posted as we do have developments here. And, of course, he will likely reiterate what we have heard, as you said, from the president, that the federal government is going to be leading this effort in terms of financing the reconstruction of this bridge. Of course, that could be a figure in the billions of dollars potentially. And of course, before any reconstruction effort can be underway, they do have to clear out just the debris that is currently in the river behind me, keeping in mind that basically the entirety of this bridge collapsed and started to be at least partially submerged. It is going to take some time to get all of that out, to clear out the waterway, not just so the bridge can be reconstructed or that project can begin, but also so that the port can be reopened and that ships can transit this waterway once again. It's worth keeping in mind here as we think about the timeline, which could be potentially very long. Governor Moore talks about it being a long-haul project earlier this morning at a press conference, but also the question of how quickly this financing can be secured. When President Biden said he does intend for the federal government to pick up the tab on this. He said that he does expect Congress will approve that, but we know that this president hasn't had an immense degree of ease in asking Congress for money and that passing in an expeditious manner, Joe. We all know what just happened with government funding. Of course, there was a supplemental request including emergency aid for U.S. allies like Ukraine and Israel that still hasn't been acted on by the House. So we'll see just how quickly it can work its way through the workings of the federal government as state officials are responding here in real time today.
That's for sure. Kaylee, we're really glad that you could get there and bring this information to us. Thank you for being at the scene. You'll be hearing from Kaylee, of course, throughout the day here on Bloomberg Radio and TV, my partner here on Balance of Power, doing the good work that you're hearing. We started our broadcast talking with Amy Morris from Bloomberg Radio, who really brought home the impact that this has on a local level. We're going to talk a lot in the days and weeks ahead about the national impact, maybe even international economic impact on trade. The biggest port in America for autos, the 9th largest overall. Coal shipments being brought to a standstill now for some 6 weeks. But if you live in the Baltimore area, this is your home. It's actually known, or was, as the Golden Gate Bridge of Baltimore. It was part of the skyline there, and this is something that is hitting the community hard. We're actually hearing now from the sports teams in Baltimore. The Orioles out with a statement that says, in part, Baltimore, we're a tight-knit and resilient city. Together, we will get through this. The Baltimore Ravens, similar. We know that the Baltimore community will stand together in the aftermath of this tragic event. We'll have a lot more for you on the later edition of Balance of Power. It starts at 5 p.m. Washington time here on Bloomberg TV and radio, and a conversation with former Transportation Secretary Ray LaHood, among others, who will join us to talk about the impact and the recovery here on a day that we would typically be leading with the new Bloomberg Swing State poll. We got new numbers out this morning. There has been so much breaking news so far today, I haven't had a chance to get to it until now. And as we heard from Joe Biden ahead of his trip to North Carolina, the news is quite good for him. The blue wall we talk so much about may in fact be in place for him by the time we vote if the trajectory remains intact in the polling that we've seen. Bloomberg, of course, working with Morning Consults on this on the monthly. This has been a rolling poll, if you will, or a monthly poll that we've been updating in the 7 swing states that will likely decide the election, will likely pick the next president of the United States. The headline on the terminal: Biden erases Trump's lead. In blue wall states, he needs to win. And to that end, we bring in Eli Yokley, U.S. politics analyst at Morning Consult, our partners on this poll. Eli, it's
In 10 minutes' time at 2:30 p.m., we have ECB's Lane speaking, and he is speaking at a Trinity Students Economic Review event at Trinity College in Dublin. In 5 minutes' time at 2:30 p.m., we have ECB's Lane speaking, and they are speaking at a Trinity Students' Economic Review event at Trinity College in Dublin, Ireland. Shortly expecting comments from ECB's Lane. NYMEX diesel April futures settle at $2.62 a gallon. NYMEX gasoline April futures settle at $2.70 a gallon. US crude oil futures settle at $81.62 a barrel. That's down 33 cents or 0.4%. NYMEX natural gas April futures settle at $1.57.
there are West Coast is going to pick up some of the slack here, and also, like I said, New York and New Jersey, they're not up to 100% capacity. They're 20% below where they could be, and so we were told that some of the ships can come this way.
What will you be listening out for? We are awaiting the NTSB chair, Jennifer Homendy, who will be giving a briefing, who's there in Baltimore, and we'll take you there as soon as it happens. But what are you going to be listening out for in particular?
Well, I know they've said there's no sign of terrorism or anything but an accident. I'm curious about how it's possible that really no vehicles were on the bridge. I'm curious. They haven't updated us yet.
Yeah, we do know that the ship was able to send a Mayday signal that perhaps contributed to that.
Yes.
But I think that's a really good question too, and hopefully we'll get more info on that in the coming minutes.
Just to remind everybody, you know the story. I'm sure you've heard about it, but of course, a major commuter bridge in Baltimore collapsing after being stuck by a container ship, causing vehicles to plunge into the water and halting shipping traffic at one of the most important ports on the U.S. East Coast. Baltimore Fire Chief James Wallace saying 2 people have been rescued from the scene. This is from an earlier report, and we know we've gotten some updates from that. In the meantime, we've got a live shot we just want to take for those who are watching on Bloomberg Television and on YouTube and, of course, on Bloomberg Originals, that we are awaiting a press conference on the ground there in Baltimore. It will be held by the NTSB chair, Jennifer Homendy. Let's take you there.
Some remarks about today's accident and investigation, and we'll take your questions.
Thank you for joining us. My name is Jennifer Homendy, and I'm the chair of the National Transportation Safety Board. Normally, our investigator in charge, his name is Marcel Muse, M-U-I-S-E. His first name is M-A-R-C-E-L. Marcel Muse is our investigator in charge for this investigation, but just giving on scene today, it's very early. I've asked that he remain at the command post to continue what he is doing so that I can brief you on what we're doing so far. Also with me is one of our newest board members. This is Alvin Brown, and this is his training launch. So the NTSB arrived on scene at 6 a.m. To investigate an accident involving a Singapore-registered vessel with the name Dali, D-A-L-I, which made contact with the Francis Scott Key Bridge in Baltimore, Maryland, at around 1:30 a.m. this morning. The vessel is 985 feet long. It's a 95,000 gross ton container ship. I've seen information about crew members on board. We still need to verify the numbers of crew on board and their status. Under our Memorandum of Understanding with the Coast Guard, the NTSB is leading this investigation. The Coast Guard will support this investigation. Our Memorandum of Understanding, for example, provides for when an accident involves another mode of transportation and other factors, the NTSB will lead that investigation. Now, I want to thank the U.S. Coast Guard. We have a very cooperative relationship with the U.S. Coast Guard. I particularly want to thank Deputy Commandant for Operations, Vice Admiral Gautier. I want to thank Admiral Gilbreth, who's commander of the 5th Coast Guard District, and Captain O'Connell, who's the sector commander. Before I go on behalf of the NTSB, I want to extend our deepest sympathies to those who have been affected by this significant event. The NTSB, as I mentioned, does many significant transportation events, not just aviation. We do accidents and incidents in marine safety as well, and of course with bridges and other highway infrastructure. And for this, there were many that were affected by this collapse, and our deepest sympathies go out to the families, loved ones, and others who have been affected. I'm going to get questions on fatalities and injuries, which I'm not going to answer. That is not something that the NTSB answers. I will refer you to local authorities on all of that information. What I can tell you is a search and rescue is still underway. So we are very hopeful, and again, our thoughts are with the families and their loved ones. Again, we got here at 6 a.m. And we are standing back to allow the Coast Guard and search and rescue to
Brent's
continue
crude
their search and
futures
rescue
settle at
operations.
$86.25 a barrel. That's down 50 cents or spot
There
5/8%.
is a lot of information that we can begin to collect. We have a team of 24 on scene, including Member Brown and me. The team of experts include experts in nautical operations, and what they're going to look at and begin to collect is information on vessel operations, safety history, safety record. They'll look at the owner, they'll look at the operator, and they'll look at the operations this day. Today, they will also look at company policy, any sort of safety management system or safety management program will be looked at by them, and our human performance team as well. We have a human performance expert here. We have an engineering team. We have survival factors, and then we have a team here that is getting the recorders. We also have a highway safety team, our team out of the Office of Highway Safety, including structural engineers, bridge experts who will be here and are continuing to come in. We have a few here, and one or two others are coming in the next few hours. We also have our family assistance team on site, and our family assistance team works with those that were affected by a particular event, families, friends, and other loved ones, and they will help them get in touch with the resources they need while also providing them with the information that they need as we move forward with our investigation. This is a team effort. There are a lot of entities right now in the command post, all focused on search and rescue as they should be. But I do want to, in particular, thank the Coast Guard, the Maryland Transportation Authority Police, the Federal Bureau of Investigations, the Baltimore Fire and Rescue, and the Maryland State Police. I also know that there are others on scene I'm sure I have missed. For example, Army Corps of Engineers is here, a great deal of expertise, and all focused on what is very important, which is the people first. I have been in contact with my counterpart in Singapore. Director Chong is the director of the Transport Safety Investigations Board. The NTSB maintains relationships with our counterparts in other countries often and stay in close communication. So the director and I have been in communication many times before on safety, so it was a good conversation. He is sending some personnel here tomorrow. Also, personnel will be arriving from the Maritime and Port Authority of Singapore, who has the focus of being the regulator in Singapore. Now, it's not a lot of information that I can share at this time, and I know there's a lot of information that seems to be circulating. The NTSB doesn't speculate. We provide facts. And so there isn't a lot we can share right now because the focus has been on the people. However, if you know me, I like to provide information as we can when we're able to verify those facts and be open about that. Transparency is one of our mandates, one of our core values. So please monitor ntsb.gov and X where we will post when we are having another media briefing. We do have an organizational meeting tonight at 5 o'clock, which I mentioned, to determine where we want to go next on the investigation. But there's a lot of information we need to gather between now and then in the days and weeks that follow. So with that, I am going to take questions. I will call on you. Please state your name and your affiliation. We'll start with Tom and then go over here.
Thank you, Chair Helmond. Tom Costello with NBC News. You spoke of one of the teams within this NTSB structure looking for specifically the reporters on board the ship. Can you speak to what type of reporters may be on board the ship, and what do you hope that what information might they provide?
Yeah, at this time, I will have more information about the recorders tomorrow. We chose not to board the vessel today to allow some time for the search and recovery, which we did not want to interfere with. That is the first and foremost. We do have some information, but we need to verify that information first before I provide that information, before I verify it. So we'll have that information tomorrow, or maybe later tonight if you want to check with me.
Thank you.
Yes.
Sabina with ABC News. How long will the search go on for today?
The search is, it's a question on how long the search will go on today. The NTSB is not in charge of the search and rescue operation. That is the U.S. Coast Guard, so I would refer you to the Coast Guard for that information. Yep.
All right, everybody, we're going to continue monitoring that press conference there on the ground in Baltimore with the NTSB chair, Jennifer Hamidi, briefing media after the collapse of the Francis Scott Key Bridge. So obviously we'll bring you any headlines, but she did point out that they are going to do another meeting later on today at 5 p.m. Wall Street time, and that they will continue to update on the situation.
She also noted that the NTSB has been in touch with their counterpart in Singapore, and they are sending personnel tomorrow. She did mention many times that the search and rescue is still underway in the bridge collapse, and that is the priority right now. In fact, they chose not to board the vessel so they could give room to search and rescue as well as to the Coast Guard to continue with search and rescue.
NTSB, though, obviously, as she said, leading the investigation. Hey, let's get a check, though, on the trade on this Tuesday with an update on that. Back over to John Tucker.
All right, the major averages, Carol, still higher right now. The advance for the S&P 500 and the NASDAQ Composite Index approaching 10% since the start of the year. After the two-day pullback, stocks, again, they were advancing today. And the best performing stock in the S&P 500 right now, McCormick, it is up over 9% right now, closing in on 10%. Again, that's the best performing stock in the S&P 500 after delivering an encouraging sales update. Worst performing stock right now, that belongs to United Parcel Service, 8% lower. Their revenue target beat estimates, but Wall Street analysts kind of underwhelmed by the performance there. S&P 500, 8 points higher right now. That's up 0.2%. 52.26 on the index. The Dow Jones Industrial Average up 67 points, a rise of 0.2%. The NASDAQ right now 40 points higher. That is up 0.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Carolyn Tim.
All right, John Tucker, so appreciate it. Hey, John, of course, breaking down the trade. Don't forget, we did get some economic points earlier today, some data points. It's a busy, chock-full week, if you will, of economic data points. We had U.S. consumer confidence holding steady in March. Americans were sanguine about their current situations, Tim, but grew slightly more pessimistic about the outlook. And then new orders placed with U.S. factories for durable goods, that rose in the month of February for the first time in 3 months, so suggesting that firms are somewhat optimistic about the direction of the U.S. economy.
On that, gold earlier extended Monday's gain ahead of key U.S. inflation data, which we get on Friday. That could provide traders with a firmer view on when the Fed will start cutting interest rates. Gold did pair most of those gains, but still near an all-time high of more than $2,200 per ounce.
All right, so with a look at at kind of the broader macro environment and also the precious metal space, we welcome the president of World Markets at Everbank. He is Chris Gaffney. He's here in studio. Everbank, by the way, noting on its website, $36.2 billion in assets and $27.9 billion in deposits as of the end of 23. Chris, nice to have you in studio. How are you?
Great, thanks. It's great to be here.
Well, it's great to have you here. And I have to start, you guys think about the broad macro and things kind of coming at us. And I am curious if you have any thoughts about what's going on in Baltimore right now. We're looking once again very deeply and closely at U.S. supply chains. And I'm just curious if you have any thoughts in terms of your world and how you think about it might impact potentially if we see some supply chain disruptions in terms of higher prices, inflation, and we know the story here.
Exactly. So, it will definitely lead to, if anything, higher inflation and a higher inflation reading with supply chain disruptions, which could lead the Fed to, stop rate cuts or actually pause on their planned rate cuts. Right now, we believe that the Fed pretty much has a predetermined rate cut path, and it's really looking for reasons to knock them off their path instead of reasons to cut. And I think June is definitely on the table, and they're going to look to cut in June.
And how many do you think the Fed will do this
Well,
year?
they're still saying 3, and
not every member of the Fed,
right? And they pulled back a little bit on their 2025. I think it's really dependent on where they believe inflation, where this next PCE report comes in. They ignored the last 2, and they seem to be tending to look to let inflation run hotter for longer.
Because they believe those longer term inflation expectations are anchored, right? They're sticking to that.
And they are in kind of a situation where with the amount of debt that we have here, they need to lower interest rates, especially before it really has an impact on the global economy. And
You're talking
US
about the cost of servicing that
Exactly. That cost of servicing debt is going to take more and more of the budget, of the U.S. budget. So by lowering interest rates, they'll have less debt service cost.
It's not one of their mandates, Chris.
I know. It's
hate to remind you, but
strong labor and
I didn't hear Powell say this at all during the press conference last
night.
But
extra mandate
it's in
there.
the background, and I do believe that.
And many people have come on and said, U.S. debt. All of a sudden, you go back 10 years, 20 years. It's like every conversation was about it.
Right.
It's gone to the wayside, but
Larry
it is
Fink
kind of
brought it up this morning.
He did.
And by cutting rates, they'll ease that debt service. And I really think that from what Powell was saying in his presser, they're going to let inflation run a little hotter. I think they'll adjust their inflation target. I don't think 2% is realistic, and I think they'll adjust their inflation target up. What that does to the markets, is 2.5%, 3% inflation going to kill the markets? I don't think so, and I think they continue to lower rates.
Why do they have to make that adjustment? Is it because the macro factors say we're in a very different environment post-pandemic?
I think this is sticky inflation, and I think the interest rates are going to settle at a higher level than the market's expecting right now. Because of the higher inflation, the stickier inflation, and
because of macro. What is it that's changed in our inflationary environment?
Yeah, I think that we had the supply chain interruptions, but I think in general the economy is doing well. The labor market is very resilient. Consumers are resilient. We've got very strong U.S. consumers. They don't seem to be adjusting their spending. Confidence, while the longer-term confidence is questionable, U.S. consumers are still very strong. So they're going to continue spending. We see services continuing to, inflationary pressures on services. Any supply chain interruption, that's going to add to inflationary pressures also.
So let's get to gold and precious metals. Yeah. Given the narrative that you just gave, why are we seeing gold near an all-time high?
Well, absolutely. It's kind of an inflation hedge. Mm-hmm. Traditionally it's shown as an inflation hedge. But what we see on Everbank's World Market Desk is individual investors concerned about the global economy. They're using it as a uncertainty hedge or a catastrophe hedge. And we're seeing people come in, individual investors come in and want to own a hard asset. One of the things that propelled gold to the record levels was central bank buying. And central banks were switching their reserves out of US dollars into precious metal, into gold. And I think some of the consumers are starting to start to do that also. And wanting that hard asset, wanting the diversification outside of just owning their traditional asset classes.
Chris, because you do see so much on that platform, quantify it for us. Is it back to levels we saw pre-pandemic? Is it, give us an idea of, if you're seeing buying, how much has it kind of picked up in terms of frequency?
Well, the physical buying isn't quite back to the levels we saw, post-pandemic. We went through a silver shortage and we saw spreads on the physical silver widen dramatically. They're not back there yet. The spreads are narrower. Demand is up though, and we're seeing more and more demand. And talking to individuals, it's more about concern about where the global economy is and the U.S. economy. The valuations on the equity markets, seeing maybe some overvaluation there, and really pushing people to they want to have something to hold. So we're seeing the physical precious metals. We haven't seen so much the inflows into the ETFs. It's more the physical demand.
Interesting.
Okay, what about demand for Bitcoin?
That's what I'm saying.
Because when
Same thing?
Yeah, well, when we talk about, some people come on our program and say, our bull case for Bitcoin is that this is literally digital gold.
Right.
Do you believe it is?
No. I still
Fixed
think...
supply.
Yes.
We know how much is there.
Yeah, it's not controlled by any certain central government like fiat currencies are. So it does share some of those. It shares some of those. Is it a hard asset though? Is it, where is it? Where's it stored? There's question marks. We haven't had a Mt. Gox in a while, but questions about that it's in the ether. So I think for some investors, they feel it's an alternative to gold. I think the jury's out. I think it's got to establish there's a long history with gold. And so I think that is seen as the safe haven, the uncertainty hedge. People can trust that it's a hard asset. It's there in their portfolio. I still feel Bitcoin is more speculation, especially with the volatility it has.
You guys don't offer it on your platform, do you?
No, we do not. We do not deal in cryptos.
Yet?
We do not deal in. I mean, it's we're a bank, so we're not encouraged to deal in the crypto sphere. Right?
There are traditional banks getting into crypto. Sorry, go ahead, Carol.
No. Well, I was just going to save 30 seconds because you guys are a bank and you do see so much. I mean, how do you describe the economy? And forgive me because we only do have about 30 seconds left.
Not a problem. So I think the U.S. economy remains strong, mainly on the back of very strong and resilient U.S. consumers. Labor market's still good. So, we'll see the higher interest rates have not had an impact yet. And I think the Fed is still going to go ahead and cut and trying to get us to this Goldilocks scenario where they can cut rates and still keep inflation down while a strong labor market. So
no stress points real quickly?
Oh, there's the debt. The debt levels and on both consumer and government is really the stress level, and that's the real question mark. And then, of course, the geopolitical tensions.
So appreciate it. Thank you so much and for going along with us because we know we had a lot of breaking news. Chris Gaffney, thank you. President of World Markets at Everbank, joining us in studio. Coming up next on TV, The Close, and we're going to continue on radio. This is Business Week.
Attempts out there to build on the U.S. equity rally. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. We thought it was going to be a quiet week.
Yeah, it's a lot going on today.
We were wrong. All right, let's get a check-in here on where U.S. market action is. So the S&P is up just 0.2%. Utilities and energy, though, weighing on the S&P. The worst performing stock within the S&P, though, is UPS. We'll get to that in just a moment. A couple things going on. J.P. Morgan thinking that their 3-year outlook was actually aggressive and are a little worried they're going to have to raise costs in order to meet some of their goals. And then, of course, on the flip side, one of the best performing stocks today, no doubt, is DJT. That's a SPAC merger of Digital World Acquisition with Truth Social. That is completed. And the 5-year worth checking in, going nowhere fast. We did have an auction today. It was tepid demand, but you know, we're hanging in there at 422, Romaine.
Yeah, we're going to keep you up to date on all of the market action here on the day, but we're going to spend a lot of time really focusing on that bridge collapse overnight in Baltimore, Maryland. As emergency personnel assess the human toll and the bureaucrats assess the financial costs, the companies that rely on that Baltimore Marine Terminal and the roads and the rail lines leading to it, they're scrambling right now to find alternative routes. Baltimore is the busiest U.S. seaport for sugar, for farm equipment, and for cars. Ford CFO John Lawler telling Bloomberg earlier he's already looking to divert cargoes to other ports. General Motors releasing a statement saying that it's going to do the same as well. U.S. coal exports, about a fifth of which move through Baltimore, could be halted for at least 4 to 6 weeks. That's according to the CEO of trading company X-Coal Energy. Consol Energy, which operates one of the big coal facilities at that port, saw its stock drop the most this year. Arch Resources down as much as 5%. CSX, which has rail lines servicing the terminal, also selling off, as did energy pipeline company Kinder Morgan. A little bit later, we are going to talk to the UPS CEO, Carol Tomei, as several logistics companies do have facilities at the north end of that bridge. That includes Amazon, FedEx, and Home Depot. And while most economists that Bloomberg has spoken to say the financial impact will be manageable, the X-Coal CEO said there is a limit to how much you can actually divert to some of those nearby East Coast ports like Norfolk, Virginia, Alex, as well as New York City.
Also, do they have to wait in line to do it?
Yeah.
Is there just going to be a backlog at the end of the day? Also, the question is, you know, what happens to the vessels that are actually in the no-go zone? So this is the B map at Bloomberg here. This is the bridge. Right here is where the dolly is. Now, it's the checks that you need to pay attention to. These are all the vessels that now kind of can't get out. Some of them are tugboats and tug vessels, but other ones are, say, a bitumen tanker, which is heavy oil, a ro-ro cargo, so roll in, roll off. That has to do with cars, general cargo ships, a bulk carrier. What happens to them is they kind of stay stuck firm, as it's going to be so difficult and may take years to kind of clean this up, Romaine.
Yeah, absolutely. We had a chance to hear from the president a little bit earlier. Here's what he had to say.
I told them we're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together. Everything so far indicates that this was a terrible accident. At this time, we have no other indication, no other reason to believe there's any intentional act here.
Let's go out to Baltimore right now, where Kaylee Lyons, the co-host of Balance of Power, is on the scene there. A press conference from the NTSB just now wrapping up. Kaylee, what do we know?
Well, what we just heard from the NTSB chair, Jennifer Hominy, Romaine, was frankly that there is a lot we do not know at this point. She emphasized that right now the priority, really all that is going on, is the search and rescue effort, and that is being led by the U.S. Coast Guard. That is still ongoing, as we know that there was a construction crew present on the bridge at the time of this collision and collapse. 2 people have been rescued, one of which is hospitalized. 6 others, though, remain unaccounted for. So really search and rescue effort, is being what prioritized right now, though she did say they have a team of 24 investigators that are here on scene that will begin working to figure out what went wrong. Of course, while the human impact is first and foremost here for first responders, there are, of course, secondary effects. This is a bridge that had 35,000 people per day, roughly, transiting over it for commuting. Otherwise, of course, 4,900 trucks daily, we understand, according to trucking associations from the commercial end of this, were crossing this bridge. All of that now disrupted, having to route to I-95 or other ways around Baltimore. Then, of course, as you've been discussing, there is the cargo impact. This is an incredibly busy port. Nearly 850,000 vehicles were handled by this port in 2023. And of course, as you've alluded to, auto's not the only industry that risks disruption here, commodities as well. And there just has been no timeline given by authorities at this point as to when the port could reopen or when the bridge potentially could be reconstructed. Governor of Maryland, Wes Moore, when speaking to reporters earlier today, did not put a timeline on things, though he did describe the reconstruction of the bridge as something that would be a long-haul project. And of course, we heard from President Biden indicating he would like the federal government to pay for all of that. It's worth keeping in mind, though, that while he says he does think Congress would grant that. It does need to be a supplemental funding request through the legislature, and we have seen that these funding requests have had some difficulty getting through this divided Congress in not very distant memory. Of course, we just got funding through this Congress last week, so that could be something to watch moving forward. But right now, it really is a search and rescue effort underway, and this is going to be a saga that is measured not in weeks and months, but potentially years to come.
Yeah, exactly. All right, Kaylee, thank you so much. Really appreciate it. Bloomberg Balance and Power co-host Kaylee Lines. So outside that rescue effort, the bridge collapse is causing big concerns about the supply chain. It is the #1 port for U.S. auto imports. We spoke earlier to Ford's CFO about that fallout.
It's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit.
All right, joining us now is Bindi Vakil, co-founder and CEO of supply chain intelligence and analytics firm Rezilnik. Literally, no one better to talk to about this. You're running your models, you're crunching the numbers. What has to be diverted? What's at risk?
Thank you for having me. Rezlink's data shows there are about 3,200 sites that are involved in various supply chain activities such as logistics, distribution, warehousing, and manufacturing in and around 30 miles of this port. And over 7,000 parts and raw materials come from this region. And so this is a pretty important region from that perspective. Now, the port itself is transporting it's the largest roll-on, roll-off port, obviously. But in terms of overall volumes, it's about the 13th largest of the container, 13% of the container volume of some of the larger New York, New Jersey type of ports. Not only that, there are other ports around on the East Coast that can take some of the capacity, as you've mentioned. So overall, we see that there will be a disruption near term, but within that 3 to 4 weeks, we should start to see this really become clear how quickly the port itself can recover.
Give us a sense here, Bindia, when we talk about diverting these ships to other ports, what is, if at all, the added costs to some of those cargo ships in order to do that?
There's cost, there's complexity. Some of the larger companies that you talk to obviously have large contracts, multiple lanes of transportation and modes as well. So if the port can't operate, some of the cargo can go from rail and road. But for some of the smaller companies that are 100% reliant on the port to be functioning and don't have that backup capacity, those are the ones who really struggle when these types of disruptions happen.
So to that point, even if I'm able to divert where I'm sending my vessel, what's the logistical end on the other side? So maybe I'm waiting in line until my turn. Now that line gets a lot longer. What kind of equipment do I need to have on land in order to offload certain things?
You have to have, obviously, there are roll-on, roll-off ports like New York, New Jersey has that capacity as well as the Port of Savannah has that capacity. So there are other ports that can handle some of the cargo, but they're not sitting idle, meaning only some of that capacity can be available, which means if you're using those ports today, you may not even be using the Baltimore port, but your ship might get delayed in getting cargo offloaded or loaded. That's really the bottom line.
So, Bindia, can you fold this into some of the broader issues that have been going on? We've been talking a lot, of course, about the disruptions in the Red Sea because of the war over there, the drought that's affecting the Panama Canal, and now you add in, at least in the U.S., a major port that's effectively going to be kind of hamstrung for potentially months here. What are we looking at in terms of our overall supply chain stability? Are we back to those bad old days from the pandemic?
You know, it's not as bad as the pandemic. The pandemic really did affect so many countries at such a large scale, and it was too fast for the supply chain to recover just because we had gone into the pandemic with very low inventory levels. This time around, we have had months, if not years, of companies doing larger inventory buildups to call it just-in-case buildups. Now, while we did see some of that rebalance out where companies, due to
higher interest rates take down some of those inventory levels, we are still not back to 2019.
Yeah.
So a lot of that 2 to 4 weeks of coverage is there, more than what we had going into 2020.
All right, Bindia, always great to catch up with you. Bindia Vakil there. She's the co-founder and CEO over at Resolink. They've actually identified about 4,000 sites right now within a 30-mile radius that are going to be impacted by the collapse of this bridge. We're going to have more insight on the potential knock-on effects of the bridge collapse. We're going to actually have a sit-down with the CEO of UPS, Carol Tomei, going to be joining us in just a minute.
All right, plus you get U.S. stocks on track for a fifth-month winning streak. Stuart Kaiser, head of equity trading strategy over at Citi, joins us next.
And Adobe and Microsoft teaming up to bring new AI capabilities to Microsoft's Copilot. We're going to go live out to Las Vegas, where the Adobe Summit Conference is taking place. A key CEO, executive, I should say, going to be joining us soon. All that and more coming up in a bit. This is The Close on Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
We're just days away from wrapping up the first quarter. And if we do well this month, it will be the fifth month in a row that U.S. equities are higher. We haven't seen that kind of winning streak from November to March since 2013. Joining us now, Stuart Kaiser, head of equity trading strategy over at Citi. Stuart, does that give me confidence or does that give me pause?
I mean, I think he's giving some people pause. They're a little bit worried of the, bubble discussion.
I've been worried for how long? a bit. And I've been proven wrong every day.
Well, they say climbing the wall of worry is a good market outcome. Look, we're still pretty constructive. We've been pretty much constructive all year, and I think basically from our perspective, if the labor market holds in, remains solid, then you want to continue to run long equity risk. The Fed just took up their nominal growth expectations. They're getting ready to cut. It seems like regardless of what goes on, you're looking at something on the order of 8 to 10% EPS growth for the S&P 500. So yeah, we're still pretty positive. We're still comfortable owning equity markets here.
You sound like you make this argument a lot. Do you get a lot of skepticism out there?
I mean, less now than there was 12 months ago. But it's funny. I've been accused of being bullish. I've never really felt bullish, but I have been accused. Look, people are still concerned. I think there's still an element of the Fed's going to break something, and that hasn't happened, and we need to be concerned about that. And there are some glimmers of a little bit of risk on the labor side of the economy, which I think folks are really focused on. on as well. But look, after 20% last year, and we're almost up 10% again this year, I think most people are in the markets, might just be doing it in a more cautious way.
What does that end up entailing, though? Does it become sort of a rotation where people then look for, I guess, those stocks have been laggards, or does this maybe represent an opportunity for that money to flow out of equities into other asset classes?
I mean, our view is you still want to stay in equities here. Equities have outperformed bonds significantly in the first quarter, but historically, when that happens, equities tend to outperform the next quarter as well. So, we're not necessarily running for the hills from that perspective. I think, we do believe in the broadening out of performance in the equity market. It's happening in a very slow and steady fashion, I guess I would say. You've got those Mag 7 were about 2/3 of market cap gains last year. This year, they're at about 40%. So they're driving less of the returns. We are broadening out a bit, but if you've watched small cap at all recently, you can see it hasn't gotten all the way down.
It hasn't gotten there all the way. We saw the S&P 400, the mid caps, hit a record high, what was last week, and the Russell's still got a ways to go, but it's kind of slowly inching up there. I mean, people have clearly sort of woken up to this idea that there is something else out there other than just, NVIDIA and Microsoft or whatever.
And I think that's right, but our view is that was actually the right decision last year. Last year you had very narrow EPS growth, and that drove very narrow equity leadership. You had, I think, 3 sectors last year generated year-on-year EPS growth. That's going to be 8 sectors this year. So our view is this broadening out isn't necessarily a price phenomenon. It's more of an earnings phenomenon, and we are starting to see earnings broaden out, and therefore you should have broader participation in the markets from our perspective.
So if I want to play this options market, do I buy calls or do I buy puts at this point?
We're still in the well. If you own equities and you're worried, which it sounds like you are,
I'm always worried.
then you can hedge a little bit with puts. But from our perspective, the implied volatility has declined substantially, both in equities and on a global cross-asset basis. So the sort of the pitch to own options is a pretty easy one right here. I would say what we saw late last year and early this year was people were actually chasing small cap upside in a pretty aggressive way. Part of that, I think they were short that part of the market. And the other part is you could argue small cap is kind of the soft landing trade. It benefits from stronger economic growth and it benefits from lower yields. That sort of, however you want to, beta grab, if you want to put it that way, is kind of eased out a bit over the last 2 to 4 weeks. So we do think, we think from here you can own upside in equities via call options. If you need to hedge, we would actually recommend going a little further out, like owning 1 to 2 year type puts on the S&P as opposed to doing that tactically. But yeah, there's a lot to do.
What about in the bond market? Am I doing anything there? Because I just want to sit in the 10-year, right, and go home.
Well, look, I think it's interesting. I mean, if you were hiding in cash last year, let's say you were earning your 5%, and you're sitting here today, and the Fed's telling you we're not going into a recession and yields are going to be lower. Well, sort of the argument to stay in cash yields, I think, has diminished a little bit. So you either probably want to, to your point, lock in that higher yield for a longer period of time, or join the rest of us and put some money in equities.
Yeah, I mean, Alex, she's always behind the curve here. But it does give, to Alex's point, though, I mean, you have to know, investor sentiment and investor psychology, there's always that sense that, okay, maybe I miss the big rally. Do I go chase after some of these names and they've already risen 20, 30, 40% or something? Even the broader market, and you look at the gains we're sitting on right now on the S&P, I can imagine a lot of people looking at that like, I don't know. I mean, how much more juice is there left, in this year?
Yeah, and I think that's right. I mean, you had the NASDAQ up, 40% last year, S&P up mid-20s. So I think at the beginning of the year, you probably had a little bit of FOMO. I was hiding in my 5% and I missed 20, and I don't want that to happen again. Then you got that little inflation scare, and I think that's, gave people more confidence to be more cautious, if that makes sense. And now I think, look, you got through the quarter. Last quarter earnings pretty strong. We've got earnings coming up. The Fed seems very supportive of the market. So, valuation is high. It's not extravagantly high. So I don't think valuation is so high at this point that it should keep you out of equities. But maybe to your point, you need to be a little more selective in terms of what you're picking.
Yeah, I was surprised at how dovish Powell was here. I mean, maybe he's on board. Maybe he's buying calls. Stuart, great to have you here on the program. Stuart Kaiser, head of equity trading strategy over at Citi. Stick with us here on The Close. A lot more coming up. Out to Las Vegas for the Adobe Summit. We'll be back in a moment. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
All right, Adobe unveiling a new partnership with Microsoft. It's going to use generative AI powered technology to boost the user experience. Pleased to say, joining us now from Las Vegas is Anil Chakravarty. He's president of Adobe's digital experience business. He's out there in Las Vegas, where you're having that big summit out there, Anil. And give us some insight here. I mean, when I hear a partnership with Microsoft, I think, okay, that's a no-brainer. We all use Microsoft. Microsoft's out in front here, particularly on the public-facing world of AI. How does Adobe actually fit in with this?
Well, thank you for having me on. Yeah, as you know, Microsoft's announced the Copilot. The Copilot for marketers is the joint announcement we just did with Microsoft. Adobe, as you know, provides digital marketing and customer experience management tools for marketers. This is to accelerate personalization at scale so that they can actually do digital personalization. Now, the work that the marketers do is often something that's manual, has a lot of cumbersome tasks, and a lot of that can be automated with generative AI. So that's what we're partnering with Microsoft to do through the Copilot. And so this will be a joint product, which is a specially built Copilot for marketers through jointly with Adobe and Microsoft.
Give us a sense here. What's the cost to do this? Is this already baked in to the current software packages that these companies might have, or is this an add-on that they pay extra for?
Yeah, there are two components to it. One is the actual Copilot that you would buy from Microsoft with the Microsoft 365. And as we're working through the details with Microsoft, there will be an add-on to it specifically for the new capabilities that are available to marketers. Then on the back end, you need software from Adobe, which a lot of customers already have. So this really gets them much better advantage and competitive value out of the software that they already have. Tools like Adobe Experience Manager or Workfront or Adobe Experience Platform. These are the back-end tools that then are used along with the Microsoft Copilot that we're building jointly with them.
Anil, it's Alex. How was it to come to this relationship? Was this fraught? Was it easy? And how many more of these kind of things do you expect to do?
Hi, Alex. Yeah, we've had a long-standing partnership with Microsoft. As you know, we partnered with them more than 5 years ago when we announced the Adobe Digital Experience Platform. And a lot of the digital experience platform runs on Microsoft Azure. Microsoft and we have been partnering on a number of different fronts. And the Gen AI partnership, specifically around the Copilot, really started a few months ago and has gained a lot of momentum as both of us realized that we can bring a lot of value to our joint customers. I think both Microsoft and us are very excited about making this happen.
So what's next? More for you guys?
Yeah, I think, a lot of the things that we would do, first, we're actually going to be making a lot more announcements in the next couple of months, jointly working with them. We are actually focused on Adobe building what we call the AI Assistant across all of our products. We've announced the AI Assistant for Acrobat. You've seen all of our Adobe Firefly across the Creative Cloud. And we have the AI Assistant for the Adobe Experience Platform, which is our digital experience business that we announced today. We think all of these tools provide a tremendous amount of value both to existing customers as well as new customers, making it much easier to use our products.
So give us a sense here, and just broaden this out for us, Anil, because there's been so much talk about the future of AI and more importantly, its usefulness to the end customer, whether it's a corporate customer or an individual customer like myself. Have we reached that point here where not only is this offer some utility or use, but it's also going to be affordable or at least cost effective?
Yeah, the great question, Romain, and that has been the theme of our conference here, is how do you take Gen AI, move it from experimentation to real production and business value? 2/3 of marketers have experimented with it, but very few have put it into production for that reason. The key things that they require are making sure that the training data, the models that are used, the applications and interfaces, they all need to be very closely integrated, and they all need to be trusted to make sure that the brands that use them can safely use it for their commercial purposes. And that's what Adobe has brought together. And so we do believe that it is really now poised to take off for actual commercial deployments, because you take something like Firefly, for example, it's only trained on licensed data. Any images that a company that's working with Firefly generates is their intellectual property.
Yeah.
We make sure that we provide them custom models. So it's really now well positioned to go into actual production.
Anil, really appreciate you taking time out of the summit to talk to us. Anil Chakravarty there. He's the president of Adobe's digital experience business at Summit out there in Las Vegas, a partnership between Adobe, Alex Steele, and Microsoft. Next time you buy a little Microsoft keyboard, Alex, it's going to have a little Copilot button. You tap that button, and that brings up all your AI features here. Are you sold?
What if I don't have a Microsoft keyboard?
Well, you're behind the curve then.
I am.
You're like, are you still like at home on like a little typewriter or something?
I don't have a computer at home.
Wait, what?
Just drop that right
Whoa.
there. I don't.
Right.
I have a work computer, but I don't have my own computer at home.
Okay.
I'm never on it.
We need to take a break here to digest this latest revelation from Alex Steele. When we come back, the UPS CEO, Carol Tomé.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving them the tools that they need to get back on track.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
I want to welcome our Bloomberg TV and radio audiences. One company that we're watching today is UPS. The company expects sales and profit to grow over the next 3 years. The company outlined its new strategy during an investor presentation this morning, projecting revenue to grow by as much as $114 billion and adjusted operating margin above 13% by 2026. Joining us now for more on this plan is Carol Tomé, CEO of UPS. Carol, thank you so much for joining us. I know it's been quite a busy day. I got to ask, the stock is down almost 8%. Investors not liking it. Why?
Well, Alex, if I could answer that question, I'd probably have a different job. I was really proud of our team today and the outline that we provided to grow our company, our revenues, and our margin, and invest in the future. So I'd love to talk about our plans and how we're going to create value over the long term.
So first of all, that was a great answer. Second of all, I think to the point, what some analysts were pointing out was a couple-fold. One is that you're going to have to maybe raise prices in order to meet some of these estimates in a tough growth environment. So I wanted to get your thoughts on that. So give us your thoughts on that first.
I'm happy to. So we divided our growth into 3 different segments: the U.S., international,
According
and then
to the
supply chain solutions.
USTR office,
with an
United
overarching
States mission
theme
to
of growth in
WTO received a
healthcare. And
consultation
healthcare
request
logistics
from
is probably
China
the most
regarding
exciting
parts
growth
of the
opportunity
Inflation
we have
Reduction
ahead of
Act.
us. The addressable market, well, it's big, $152 billion, although we're focusing on the complex side of healthcare logistics, which is about $82 billion. Last year, our healthcare logistics revenue was $10 billion. Over the next 3 years, we plan to double that to $20 billion. So that's one way we're going to grow without raising prices. We're just going to lean into an opportunity that values our end-to-end complex logistics network. If we come back to the United States, we plan to grow revenue by about $10 billion. Part of that will come from volume growth, and part of that will come from higher revenue per piece. But on the revenue per piece, don't be confused by the growth there. Part of that is leaning into parts of the market that really value our end-to-end network, like small and medium-sized businesses. And those packages tend to have a higher revenue per piece than other packages.
Yeah.
We also are leaning into the B2B space, and those packages tend to have a higher revenue per piece.
Yeah.
And then finally, well, we do tend to raise prices every year. We have something called a general rate increase. Our general rate increase for 2024 is 5.9%. Now, I don't think we'll hold all of that, but we should hold about 50% of that.
I am curious, though, Carol, when you talk about those growth targets and those ambitions, where are those customers coming from? Are they basically with one of your rivals now, and you think that maybe you can sort of poach some of those people? Or are these new folks that maybe aren't really using a shipping and logistics service right now that will now somehow find you at UPS?
So the answer is yes to all above. So if I think about healthcare logistics, it's highly fragmented with tens of thousands of players in that space. We have an opportunity to grow into the space because we have an end-to-end solution coupled with cold chain packaging, ultra cold chain packaging. So we are the best in the world in that, and we can aggregate this fragmented market into an end-to-end solution. If we think about growth outside the United States, the addressable market that we're going after is about $50 billion. And that's held by other players that you can think of, like the largest player in the world outside the United States, for example. So there will be a share shift opportunity as we continue to sell across our end-to-end portfolio. And this this really differentiates us from many of the players in our market because we believe in orchestration.
Yeah.
Because we have an end-to-end network, we can change the mode that you need to ship your product the most efficiently.
So that's the sales growth story going forward. Talk to me a little bit about the bottom line, about margins. You've already been in cost-cutting mode. We've seen at least announcements of some of those layoffs here. What more is coming? What more should investors expect?
Yes, so last year, as you know, the small package market shrunk from where it had been the previous year. And so we looked at that reality and said we've got to right-size our business to meet the size of our company. So we did make some decisions to do just that under an operating model of fit to serve. Moving past that, though, is the very exciting opportunity that we have to drive out cost through automation. Do you know that we have over 1,000 buildings in the United States? And many of these buildings were built 50 years ago, 60 years ago. We're 117 years old as a company. And as we looked at the buildings, we said, my gosh, we have an opportunity actually to consolidate buildings that aren't automated into brand new automated buildings and drive productivity. So we call this Network of the Future, which we announced this morning, and it's very exciting. We will have, by the end of our initial phase, we will have 400 buildings that are fully automated. And with this automation, well, we're going to drive out cost. We'll drive out $3 billion of cost between now and 2028, and about half of that will be realized by 2026.
Carol, so the automation doesn't necessarily just mean layoffs?
Automation is automating inside of the buildings. It means everything. Using automation for route optimization, we're using automation to change addresses, using automation to change to sort packages, of course, using automation to actually put packages into package cars and then deliver it. So it's end-to-end automation. And with end-to-end automation, yeah, there's a productivity opportunity, which means we don't need as many people to move the packages inside of the buildings that we have today. But there's an opportunity for those people to do something else. So as we lean to automation and technology, particularly generative AI, there's an opportunity to move off of the floor of the building and go into the control rooms.
So then going back to the healthcare, well, I guess in general, you had mentioned that revenue targets will include $6 billion of inorganic growth. Where is the priority for that? Where would you like to be spending most of that money?
So most of that $6 billion is in what we call a pipeline. We've been actively looking at opportunities to expand our healthcare logistics portfolio. In fact, we've made a couple of acquisitions recently, one BOMI, the second MNX Global Logistics. Both of these acquisitions enhanced our capabilities, particularly in cold chain. So as we think about opportunities going forward, we're going to look for those enabling acquisitions. They're all around the world. It's like a string of pearls. There's no large acquisition, but a string of acquisitions that will continue to enhance our capabilities and allow us to grow. So the number wasn't made up. It's based on a pipeline that we're actively working.
Carol, I do want to ask you a bit of a broader question here, just about the health of our supply chains here in the U.S. As you know, there was a horrific and tragic accident overnight in Baltimore, the loss of life. But of course, now a lot of people looking at the potential economic toll, the need to reroute ships, the need to reroute ground transportation, rail transportation in order to get things off the ship. Is UPS in any way affected by the collapse of that bridge?
Well, our hearts goes out to those who were affected. It was just a horrific accident. We have checked in on all of our UPS folks in that area, and all of our folks are safe, thank goodness. Because we do have an end-to-end global supply chain, we can reroute products to different ports around the world. We can also move it off of the air, off of the ocean and put it into the air. We'll help reroute the world. We do this as a matter of course. We can.
And so for the customers your existing customers that depend on you, depend on UPS, and more importantly, the folks at the end of that line who also depend on getting delivery of those things for medicine and other things that are critical here, what type of disruptions, if at all, should they expect?
Well, I can't speak to the specific accident because I don't know the cargo on the carrier. But when it comes off the carrier, we'll help to get it routed. And because there'll need to be a repair, obviously, you can reroute ocean freight to ports like in Savannah or up the Northeast coast. So we've got a presence everywhere, so we can assist in that.
Carol, before we let you go, sort of staying on the macro theme, what's your take on the U.S. economy? How are we doing?
So from our perspective, the U.S. economy is very resilient. And the good news from a year ago is that inflation rates have come down because inflation actually had an impact to our business, a negative impact. Think about this, when inflation rates were 6% or higher, particularly in the area of food, more and more consumers' wallets were going to food purchases, and those purchases, well, they don't ship through our small package network. So as inflation has come down now to 3%, and the Fed has indicated it's on its way to 2%, that's better news for us because more dollars can go into goods rather than just food. But it does appear to be a resilient economy. And if I look outside of the United States, candidly, we're seeing some green shoots coming out of the China-Asia trade lane, particularly as it relates to the softness that we saw a year ago.
Carol, we really appreciate you taking time to be with us today. I know a very busy day for you as you really try to sell the UPS story. Carol Tomei, she is the CEO of United Parcel Service. And we do want to go back to that big news of the day, the big national news, and that is the bridge collapse out there in Baltimore, Maryland. The governor of Maryland, Wes Moore, speaking right now alongside Pete Buttigieg and Senator Ben Cardin. Let's listen in.
I know you have had no rest in a very long time, sir. And so I want to say how much we appreciate you. But also, it's to the members of the philanthropic community who have been reaching out and offering support. It's the members of the private sector who have been reaching out and offering support. It's the sandwich companies who have said we're going to shut down because we just want to make sure that the first responders are getting meals. Everybody has stepped up. Everybody has raised their hands to serve. And I can tell you, it is so deeply appreciated. It's so deeply felt. And for everyone who is offering prayers and supports, I can tell you those prayers are working and we are grateful. And the thing that I would ask for people to remember is this. The first, this is very much still a search and rescue mission. We are still actively looking for survivors. We know, and that's the pledge we've made to these families, and this is still very much an active search and rescue mission. And there is not a single resource that we will hold off on deploying. I have already authorized the deployment of everything from air and resources to make sure that this search and rescue operation is carried out to its fullest intent. The second thing I want to remind people is that this will not be short. There's going to be a long road. There's going to be a long road, not just as we go from search and rescue. There'll be a long road as we talk about what does the future of this region, the future of the area look like. And we're going to need each and every one of you. We're thankful to have partners like what we have in the Biden-Harris administration. We're thankful for the partners that we have in our federal delegation. We're thankful for the partners we have in our state and local leadership. We're thankful for the partners that we have in the private sector and the philanthropic community. We're thankful for the partners that we have within the Moore-Miller administration. We're thankful for each and every one of you, both Marylanders and non-Marylanders who have reached out and offered support. We feel it. We need it. And we are truly grateful for it. And I think just in this time, this state has been able to show what it means to be Maryland tough and Baltimore strong. And this state and this city will continue to show exactly that. And so with that, I want to turn it over to our Secretary of Transportation, Pete Buttigieg, with a deep sense of thanks and appreciation. Oh, I apologize. Before I turn it over to Secretary Buttigieg, I want to turn it over to the dean of our delegation, and someone who has been leading from the front this entire time, and we are deeply grateful for the leadership of Senator Ben Cardin.
Governor Moore, first of all, thank you very much for getting our whole team together to meet this challenge. And our prayers are with the families of those that are lost at sea at this moment. As the governor said, it's still a search and rescue. So we are hopeful. and we are with the families. I also want to underscore our thanks to our first responders. They did an extraordinary job, acting very quickly and saved lives. So we thank our first responders for everything that they have done. I just really want to underscore a couple points. Our first priority is the search and rescue for those that were on the bridge. We then need to make sure that the channel is reopened. It's critically important to our economy. It affects many, many jobs. It affects not only jobs here in Maryland, but around the country and world. So our next priority is to make sure we get that channel opened. And then we also need to fix and replace the bridge for the surface transportation. We're going to work together as a team. I am very impressed by all the partners that are with us today. We heard from them at the state level, the local level, at the federal level. I particularly want to acknowledge our federal partners. The Secretary of Transportation is with us. We have the Coast Guard. We have the Army Corps of Engineers. We have the investigators. We have the Small Business Administration. They're all here because of the commitment of the partners to work together. A special thanks to President Biden, who's made it very, very clear that he'll do everything in his power to make sure that we get the help we need to deal with this challenge. But as Secretary Buttigieg told us in our briefings, he's going to need the help of Congress in order to get things done. So I want to acknowledge our team, Senator Van Hollen, my partner in the United States Senate on the Appropriations Committee, the work that he's doing. Congressman Mfume is here. Congressman Trone is here. Team Maryland, our federal delegation is committed to working together. Senator Van Hollen and I got calls from our leadership that said they're prepared, Secretary Buttigieg, to do everything that we need to do in Congress to make sure you have the resources and the federal partners have the resources in order to get the job done. So I want to thank Senator Schumer for his call and his comments. Senator Murray, Senator Carper, Chair of the Environment and Public Works Committee, have all been in touch with us. It is a team effort, and we're going to make sure that we do everything we can to protect our economy and protect the people of our state. And with that, let me just turn it back to the governor or Secretary Buttigieg. This guy woke all of us up early this morning, so thank you very much.
Thank you. I want to thank Senator Cardin and the entire delegation for their leadership. They have been on this from the first moments. And as the Senator mentioned, and I'll say more about this in a moment, we'll be needing to work together to make sure that we render all of the support that is needed at the federal level. I want to recognize the leadership of Governor Moore, who was already wide awake and hard at work when I reached him in the middle of the night. We just had a very informative briefing with his extraordinary leadership team, and I was moved to see the partnership between state as well as county and city personnel led by the county executive and the mayor working hand in glove with us and with our sister federal agencies. And if there's one thing I have to say today, it is a note of gratitude for the extraordinary and courageous work of the first responders, some of whom are in that cold water right now, some of whom are from right here, some of whom have traveled in to render mutual aid, all of whom are responding with extraordinary professionalism and whose work has already saved lives. And to those state, county, and local responders, I would add the extraordinary work of the United States Coast Guard. We should also recognize that this is an excruciating day for several families who went to bed last night having it be a normal night and woke up today to news that no one wants to receive. They are hoping and praying, and we are hoping and praying with them. We are all putting our arms around the community of Baltimore, and that is true for all of this country. I've even heard from counterparts as far away as the United Kingdom reaching out to express their support to the people of Baltimore. As has been mentioned, been in close contact with the governor, the mayor, county leadership, and the congressional delegation. And as President Biden has made clear, the federal government will provide all of the support that they need for as long as it takes. This is no ordinary bridge. This is one of the cathedrals of American infrastructure. It has been part of the skyline of this region for longer than many of us have been alive. So the path to normalcy will not be easy. It will not be quick. It will not be inexpensive. But we will rebuild together. In order to make sure that happens, the President's plan is to work with everyone here in order to rebuild this bridge and reopen this port, including our readiness as a department to approve emergency funding as soon as we receive that request. Meanwhile, our Maritime Administration will help with port, harbor, and supply chain operations. Our Federal Highway Administration will assist when it comes to the bridge itself and any ways that we can help ease roadway congestion for residents and commuters who can no longer use this major thoroughfare. The Federal Aviation Administration is even involved, working to keep the airspace above the bridge clear for emergency personnel. PHMSA, our Pipeline and Hazardous Material Safety Administration, is on the scene to help with any hazmat issues. And our newly stood up freight office is already at work preparing for supply chain impacts that we know are coming because of the importance of this port, not just to the Baltimore region, but really to the entire United States economy. We're going to be working closely with the National Transportation Safety Board as they lead
Market on
their
close imbalance, a 4.9 billion to the sell side.
Operations in the water. I've also spoken with Secretary Mayorkas, who's working to ensure that all DHS assets are integrated. So in many ways, our work is just beginning to rebuild this bridge and deal with impacts in the meantime, to reopen this port and deal with supply chain impacts in the meantime. But today we are most acutely focused on the emergency operations underway and on the families that have been impacted. I have no doubt that we will rebuild together and that Baltimore will come back stronger than ever before. And with that, I will turn it back over to the governor to lead media questions.
Governor, any news on
There's no new information about the search efforts that we know that we still have the 6 individuals who are missing.
Governor, when you talk about the investigative standpoint, how concerned are you if there were any safety violations on this ship or the track record of the owner operator? And Mr. Secretary, if you could speak to that as well, do you have any concerns about that? Mayor Scott, we also didn't hear from you. What are your thoughts on this tragedy today?
Well, I'll take it first, and I can pass it off to Mr. Mayor. I know there's a thorough investigation that's going to be going on about everything that took place last night, the things that led up to it, and also the aftermath. And so I don't have any further comments about any concerns that we have about the companies that are involved, because there's still a thorough investigation that's going to take place.
Thank you, Mr. Governor. I think we all know this is an unspeakable tragedy. And while, as the governor just said,
and we're just listening to government officials on the ground outside of Baltimore, Maryland, after that really stunning collapse of the Francis Scott Key Bridge that spans the Baltimore Harbor. Pete Buttigieg, the Transportation Secretary of the U.S., calling it one of the cathedrals to American infrastructure. He says there will be a rebuilding process, but it will not be inexpensive, and it will be long. Officials still trying to assess the human toll as well. We heard from Wes Moore, the governor of Maryland, as well as Senator Ben Cardin of Maryland as well. All of them trying to usher support here for the rescue efforts and eventually, Alex Steele, the rebuilding efforts. Romaine Bostic here alongside Alex Steele. We are counting you down to the closing bells, waking up this morning to something that's, at least on the surface, not really a market story.
No, but unbelievable. I mean, that this could actually happen. Now, in terms of the supply chain issue, in terms of logistics, that's always interesting to parse through as well over the next coming weeks and days. In terms of the equity market, though, it's a pretty soft day. Volume is a little bit light. You're looking at the S&P now slipping into negative territory, down by about 0.1%. I did want to highlight an interesting downgrade for Hershey's over at BNP Paribas, saying that the cocoa prices that we've seen, Romaine, we talked about this yesterday.
Oh, no, stop.
That's actually maybe structural, and that it's going to eat in over years, and then so they had to downgrade.
This is why I switched to Twizzlers.
I actually love Twizzlers.
There you go.
I do. It's my one candy weakness. And I just wanted to also point out UPS still the worst performing stock on the S&P. Although Carol Tomei, the CEO, made the pitch to us that long-term growth story and cost cutting and automation would provide a lot of value.
All right, we've only got 7 minutes until the closing bells. Let's get right to it. Chris Ailman joining us right now, friend of the program and Chief Investment Officer over at CalSTRS. And I do want to start just in the moment right now, Chris, because we came into this day and we saw the market open higher. Since we started our program about an hour ago, the market has dipped into the red, and there's been a lot of questions about the sustainability of this rally, and more importantly, what investor sentiment is really signaling right now.
You know, Romaine, it's always good to talk to you. Tough day for Baltimore, so our heart goes out to them. I've got a bridge right next to me that's built in 1911, so our infrastructure's old in America. But listen, I think that investors are running out of gas. The market is certainly priced near perfection. PE, you know, adjusted around 21, according to my trade desk. So it's not out of the question, but I think that we've seen lots of gains already this year, and it's not unusual, even in a bull market year, to have some pullback. So I don't know when, but this equity market isn't going to go straight to the moon. So, yeah, I think that we should have some slow periods. Seems like we're in one this week as we wait for inflation.
Hey, Chris, we were talking earlier to Stuart Kaiser over at Citi about, do you do stocks or do you do bonds? Like, yeah, if you want the straight up income play, maybe you want to buy the long end. But in terms of price appreciation, that's really a stock play. What say you?
Alex, I'm going to play off your earlier comment, a family joke of ours. Is it Twizzlers or licorice? The answer is yes. It is stocks and it's bonds. We're going to do both. And we are both, you know, so I'm going to play off Larry Fink's letter that's coming out on retirement in America. America needs to have a balanced portfolio. And that, you know, when the equity market runs like this, that's when people need to take some profits and actually rebalance. Bonds have a yield. You can actually make a decent return out of a bond portfolio. And I think it is time for people to have some bonds. Not 100% of one or the other. The answer is and. Yes, I want both. I want bonds and I want equities.
It's interesting you bring up Larry Fink. I mean, there was so much talk about his comments about the retirement crisis, and David Weston had a chance to sit down with him, and he talked a lot about just fiscal issues and a lot of things that I'm sure you know, Chris, and we, the royal we, have kind of kicked the can down the road for years, if not decades. Is it as imminent and dire as he made it seem?
Hey, I haven't kicked it down the road. I don't know, Romaine, if you're implying Alex has kicked it down the road. I'm just saying.
Yeah, we always blame Alex.
Yeah, I know. We, the royal we. I didn't know we became royal on Bloomberg, but that's okay. Let's go with yes, and yes, it is a crisis. You know, and I'm going to emphasize something not just about infrastructure, which is on our mind today, but the 401ks. You know, obviously, I'm a defined benefit plan. I believe in mixing together all the liabilities. And as Larry points out, longevity is a serious risk. At CalSTRS, we have over 400 retirees that are over 100 years old, still getting a pension. So I understand the longevity risk, and I think that 401ks, we have a real serious risk of the baby boom running out and outliving their money.
And we should point out, this is a global phenomenon, and we only have a couple minutes left, Chris, but I want to get your thoughts about that shift in pension investments, the idea that we went from those sort of defined payment plans to more of a contribution plans, and for some cases, no plan at all. You're just on your own. How much of that maybe led to the comments that we heard from Fink today?
Well, it's that, and, you know, in the backdrop is Social Security. It's not exactly in good footing as the baby boom, my generation, starts hitting into it. So it's both. I think Larry sings that the average American family, as he said, has very little in savings, barely $400 for an emergency, and people generally don't save enough for retirement. It is so hard to get the attention of a 20 and 30-year-old and get them to save for their future. They think about it when they're 50, but frankly, it's too late. Mm-hmm. The power of compounding, you know this, Romaine, the power of compounding is amazing. And investing in this equity market and compounding is the key.
All right, Chris, got to leave it there. Always great to talk to you. Christopher Ailman, Chief Investment Officer over at CalSTRS, helping us count down to the closing bells here on a day where stocks did open higher and looked like they were set to break a losing streak, a flip-flop into the red as we move closer to those bells. A full breakdown of all the action today as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with the entire team. Scarlett Fu joining us in the TV studio, Carol Masser and Tim Stenovic in the radio fishbowl. Welcome to our audiences across our Bloomberg platforms on what, Carol Masser, looks like it's going to be another down day. Modest losses, but a third straight day of decline.
Modest losses, and again, I'm struck by some selling into the close, right? I feel like, again, this is a trend line we haven't seen, and I think this is the second second day in a row where we're kind of seeing this movement, and it just makes me wonder, are investors a little bit nervous about maybe not getting those 3 rate cuts or 2 rate cuts and maybe not even 1 rate cut this year?
Well, we should point out, too, I mean, we're at the end of the quarter, too, or end of the month and the quarter as well. So, and given how much equities have run up, you're probably going to see a little selling, maybe some profit taking and rebalancing.
And why not? I mean, year to date up 9%, so that's a pretty good quarter on the S&P 500. On the NASDAQ Composite, up 8.7%. Look, not the end of the quarter yet at this point, Scarlett, but that's a pretty good one.
Yeah, well, prepare for the next 2 days to look like today as well, where you just have a lot of nibbling around the edges. No one wants to make any big moves, especially with PCE coming out on Friday when the markets close. You're not really going to be able to react to that until Monday morning.
Totally right. Also, I should point out that the S&P is, 13 to 14% above its 200-day moving average, so we've been quite extended. So any kind of softness shouldn't be too much of a surprise on that front.
Absolutely, and you fold into that what for a lot of people is basically a holiday week. A lot of folks on vacation with a Good Friday on Friday, and of course Easter Sunday coming up as well. A volume slightly lower than where it normally would be over the last 30 days. Modest losses here on the day as we get the closing bells in New York. The Dow Jones Industrial Average lower by less than 0.1%, down roughly about 15 points as we wait for these numbers to settle. The S&P also down by a similar amount, roughly 14 points. That's about 0.3% lower. The NASDAQ Composite is going to finish out the day lower by about 0.4%, and the Russell 2000 down on the day by 0.2%.
All right, digging a little bit deeper into the S&P 500, so those big cap companies. Hey, folks, almost an even split, but a little bit more to the downside. 214 names, Scarlett, actually higher for the session, the Tuesday trade. 282 to the downside, and you've got 7 unchanged.
All right, let's take a look at the sectors through the IMAP. It'll show you that 8 out of the 11 sectors are in the red. Plenty of red there. In terms of the big decliners, you have utilities and tech and energy leading the way down. Ironically, or maybe not so ironically, 2 of those groups were among the best performers yesterday. Healthcare, financials, and staples kind of bucking the decline, but not by a whole lot. They're up at most by 1/3 of 1%.
All right, guys, to the individual gainers, I go. The number 2 gainer in the NASDAQ 100 today is Tesla. That stock at its highs up about 6.7%, finishing the day just shy of 3%. An Italian newspaper out reporting that officials at the country's industry ministry contacted Tesla about potential production of electric trucks. So maybe some speculating that that's why we saw Tesla trend a little bit higher in today's session. We know Tesla has certainly been under pressure. Stocks down about 28% so far in 2024.
Oh, look at that board you got there. This is like the Carol Master board. Tesla, Trump, and Krispy Kreme.
Yeah, that's my world.
I mean, just put Royal Caribbean on there and we're all set.
That's me in a nutshell.
No, the NASDAQ Golden Dragon Index.
All right. Wow. All right, I'm moving along here. All right, let's go to the ticker DJT, which stands for, of course, Donald J. Trump. It's actually called Trump Media and Technology Group. That one up almost 60% at its highs today. Its first official day of trading. We know it was a SPAC, and so, of course, a merger with Digital World Acquisition. It's an unprofitable company. This is something that we've been trying to dig into a little bit more today. Finishing the day with a 16% gain, but soaring. It did also trigger a brief volatility-related trading halt, but nonetheless, as I said, some outperformance in that one. Day 2 will be an interesting trade, no doubt. Krispy Kreme, yes, I actually don't eat Krispy Kreme, but nonetheless, if you go to McDonald's
That's
now,
quite the flex. You just don't like donuts?
No, they're not donuts. They're like sugar blown up in donut form.
They're like air, right?
Yeah, they're like air sugar.
They're like
really
air
good.
All right. Well, anyway, investors kind of gobbling them up today. Stocks up almost about 40% in today's session. $17.35 a share as they close. Soaring the most since, I think, 2021. McDonald's, July of 2021. McDonald's agreeing to bring the donuts to restaurants across the U.S.
That would be the IPO, Carol Master.
Thank you very much.
Okay.
This is why we have you here. Those little nuggets that just make us
Thank
smarter.
you, because I was trying to figure out.
That's exactly why. Nonetheless, the nationwide rollout is expected by the end of 2026. So some of you will have to wait. I'm done.
You're done?
Yes.
Yeah,
Okay.
Let's see what Tim has.
I do want to start with UPS. You guys were just speaking to UPS CEO Carol Tomé a little earlier. Shares ended up closing down 8%. The company did come out and say earlier today that sales and profit will grow over the next 3 years, but investors were skeptical that the targets are within reach. The stock fell. Alex, I loved your question. You started the interview to Carol Tomé asking her why investors aren't liking what they saw Earlier in the presentation, she said, if I can answer that question, I would probably have a different job.
It was a pretty good. It was a pretty good CEO answer.
Yeah,
like I respected her for throwing at that.
Kudos to you too. Hey, also keep an eye on shares of Maersk, the ADRs at least here that are traded here in the U.S. Doing that, of course, because the Dali, the Singapore registered container ship that struck the Francis Scott Key Bridge in Baltimore early this morning, was operated by a charter company, Synergy Group, but is time chartered by Maersk, carrying Maersk customers' cargo. The company did say none of its crew and personnel were on the vessel. Shares today down, ADRs down 2.44%. And then how about a little?
And I saw some of the other stocks related to that Baltimore port also moving lower, including a lot of those coal companies as well.
Yeah, certainly worth keeping an eye on what happens when it comes to supply chain challenges over this tragedy, and we'll of course keep you updated on that. How about a little paper company M&A to round things out? International Paper shares falling 6.5% on the day. This after reports that the company wants to launch a formal offer for the British multinational packaging business, DS Smith. The concern that International Paper investors may have is over a possible bidding war because Mondi did agree to buy it for about $6.5 billion just a little bit ago. Sky News did report that International Paper was considering an offer for $6.31 billion or more for DS Smith. So a little paper packaging bidding war happening here, potentially.
A side note on Maersk, I was talking to a BI analyst, Bloomberg Intelligence analyst, and think of Maersk in this instance as basically the rider in an Uber. So they're not the Uber or the driver or the car, they're just the person in the back seat. I thought that was really helpful.
But they do have cargo on there.
Yeah, but you're just riding in it.
Yeah.
You're just riding in it.
Yeah.
Yield's doing nothing. That's what I got.
Okay, that's a good.
Wasn't there a bond auction?
Yeah, but you got something.
All right, yeah, we have GameStop earnings. And when I say earnings, yeah, maybe it turned a profit in the fourth quarter. Adjusted EPS of the fourth quarter was 22 cents. Analysts were looking for 30 cents. When I say analysts, literally two analysts had projections. So take it with a grain of salt. Fourth quarter net sales, Carol, $1.79 billion. Analysts, two of them, were looking for $2.05 billion.
Yeah, and just to remind everybody, I mean, it's down about, what, 11, 12% so far this year, and it's got a huge short position on it. About 22% remain of the float is shorted. So, yeah.
Yeah, but this just kind of continues that trend. We were joking yesterday with Bailey Lipschultz about the idea that they are actually showing profitability this quarter, and Bailey pointed out that's because it's a holiday quarter, but you still got sales down 20% or 19% on a year-over-year basis, which seems to be the trend that they've had now for, I don't know, how many quarters? I've lost track. 14?
I would say we'll find out more on the conference call.
Will we?
But there will be no conference call today for GameStop. Once again, the company's saying
nicely played.
They will not be holding a conference call today, but referring people to the 10K for additional information.
That's very accessible to everyone.
Yeah.
So that stock down 13%. But, you know, if I pair this with the DJT, clearly meme stocks are still of interest, just maybe not GameStop at this moment.
Where's the growth coming from for this company? Because I'm just going through hardware
what does it do
and
again?
accessories down 12%, software sales down 31%, collectibles down 25%.
Do they still have actual stores?
That's not
they
growth.
do.
They do.
That's, you know, business going down, right? That's not growth. Like you say, you do wonder, right?
It's not growth.
Like, why are
There's a negative sign in front of it.
Expenses are going down 21% year over year, so that's a good thing.
Okay.
Long-term debt remains limited to a low interest rate environment. That's something. Anyway, that stock down 15%.
Can we talk about donuts?
Can we talk about
more about donuts?
You want to do more about donuts? Or how about, wait, you want to talk about...
Do you remember, well, speaking of which, remember when Krispy Kreme was like the meme stock way back when?
In the day, yeah.
Way back.
I once got yelled at by my boss because I told him, you know, it wasn't really a news story. Yet here I am.
Look at it now.
McDonald's, wants them in their stores.
Well, that's actually one thing that surprises me about the Krispy Kreme story is just how long it's going to take for this rollout. They said by next year they'll have this partnership in
Anything that McDonald's does takes a long
just
time.
Because of the
just
scale?
Because of the scale.
You
it's
can't make Happy Meals happy so quickly. Or happier.
Exactly.
It's just
changing one ingredient causes all these ripple effects up and down the supply chain.
I thought we were getting healthier. Forgive me. I thought we were going to healthier food.
Well, yeah, you can do that, and then you can get your injection of your weight loss drug.
Welcome to Sarcasm Television. This is just kind of that mood. Yeah, kind of interesting. All right, guys, that is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you. We will be happier, maybe, tomorrow. We'll see you for Beyond the Bell.
All right, as we say goodbye to our radio colleagues, stick with us here on Bloomberg Television. A lot more coming up on the close, a deeper dive into the results out of GameStop, down about 18% right now in after-hours trading. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to The Close. I'm Scarlett Fu with Romaine Bostick. It is the last week of the first quarter and a holiday-shortened trading week, and the price action pretty much reflects that. The volume certainly does. We have not much change across the asset classes, although there was a little bit of a late swoon for equities in the S&P 500, finishing down about 0.25%. The VIX briefly dipped below 13, but inched back up again. The 10-year yield not moving a whole lot, down 1 basis point, 4.22%. Even Bitcoin not doing a whole lot, unusually for Bitcoin. Taking a breather after 3 days of gains. Let's get you to some individual movers, and I picked a bunch of gainers because why not? DJT, this has become kind of the new meme stock of the moment. In its first day of trading, rose as much as 59% after listing through a merger with a blank check company. This pop certainly provides a windfall for the former president, at least on paper, as he faces mounting legal and financial issues. Tesla up for a third day, now up 3% on the day. It's actually trading at a 3-week high. The Italian newspaper Il Sole 24 Ore reports that officials at the country's industry ministry contacted Tesla about potential production of electric trucks. So that giving a little bit of a tailwind to Tesla. Viking Therapeutics, one of the big gainers in the Russell 2000, up almost 17%. The startup unveiled encouraging results from an early stage study of its experimental weight loss pill. So good news for that. And of course, that would be competing with the syringe shots that are currently available. And Krispy Kreme, speaking of meme stocks, which we'll get into a little bit later on, closing the day up almost 40% after McDonald's agreed to bring the chain's donuts to its stores. It'll start rolling them out at select McDonald's this year, and a full nationwide rollout is expected by the end of 2026. So slow going there, but eventually it'll make its way over. Romaine?
All right, we do want to get back to the big national story of the day, and that is the collapse of the Francis Scott Key Bridge in Baltimore. Senator Ben Cardin of Maryland now stepping up to the podium, I believe, for a press conference. I think we can go out to him right now and hear what he has to say.
Well, Romaine, this is Kaylee Lyons live on the scene in Baltimore. I am here with Senator Cardin, who was just speaking at a press conference together with the governor of Maryland, Wes Moore, as well as the Transportation Secretary, Pete Buttigieg, as we all are grappling with the tragedy that occurred here today and the collapse of the bridge. Senator, thank you so much for making time for Bloomberg. Obviously, this is still an ongoing search and rescue effort. At what point will it turn from search and rescue to trying to reopen this port, trying to start reconstruction on the bridge? Is there any kind of time frame you can give us here?
Well, they're starting those efforts, but not to conflict with the search and rescue, which is the priority right this moment. So search and rescue is the priority, but they're already planning on what's going to be necessary to get the channel open and to get this bridge replaced. Every day it's closed. Every day the harbor's closed. It's millions and millions of dollars lost to the local economy. People are going to be out of work. They're not going to get paychecks. We got to move with great dispatch. But first, let's see whether we can save some lives.
Well, and we've heard from the governor, of course, that saving lives is the #1 priority at this point. We also heard from him a description that this is not going to be short. We heard similarly from Secretary Buttigieg talking about how this could be a long haul here. What kind of timeline are you expecting in terms of when we could see transit flowing again?
Well, here's the challenge. You got a large vessel that's stuck in the channel, partly in the channel, partly not in the channel. It's got fully cargo, thousands of containers. You have a bridge lying on top of it. It's not stable, so it's going to take time to make sure that it's safe for workers to be able to remove the debris. That's going to take some time. So we'd like to see the channel opened as quickly as possible, and we're going to make sure it's done that way, but it's got to be done safely in a manner in which it will allow commerce to continue. We're looking for alternatives in the meantime. We're going to do everything we can to keep our economy flowing.
We heard from President Biden earlier today, and he suggested that the federal government will be footing the bill. Essentially, he would like to see the federal government paying for the reconstruction of this bridge. He would have to ask you and your colleagues, though, in Congress for that funding. Do you have any doubt, Senator, that funding will indeed pass? Because we've seen some difficulty in the funding department in Washington these days.
First, let me thank President Biden. He was very clear. I had a chance to talk with him, and he was very clear about the federal government doing everything in its power to cover the costs and to help us get it done quickly as possible.
Taking a look at the market wrap for today's session, the stock market failed to maintain earlier gains following a rally that had already surpassed $4 trillion this year, with Nvidia leading losses in tech megacaps. Trading was primarily driven by quarter-end positioning. According to an earlier estimate by Morgan Stanley, pensions may need to sell roughly $22 billion in global stocks and buy $17 billion in fixed income to return to prior asset allocation levels. As traders prepared for the Fed's preferred inflation gauge on Friday, when markets would be closed, they analyzed the most recent economic data. U.S. consumer confidence remained stable, durable goods orders increased, and home price growth accelerated to the fastest rate since 2022. The S&P 500 remained near 5,210, with Nvidia halting a 6-day rally and falling 2%. United Parcel Service fell as investors viewed its long-term sales target as difficult to achieve. Former President Donald Trump's startup Trump Media and Technology Group soared in its first day as a publicly traded company.
Dan Close is joining us. He's the head of municipals over at Nuveen, which has about $188 billion in assets under management. And Dan, I do want to start off with the comments that the senator was talking about, the idea that the federal government might actually foot the bill for this. Maybe they don't. Maybe this does become much more of a municipal process, one that might actually require some degree of municipal borrowing here. Have you ever been kind of in the mix of something like this, a project like this, of this size and scale, and not just size and scale, but one that we assume is going to have to be done relatively quickly?
Sure, and thank you so much for having me on the show. You know, we do see this commonly in the municipal market. If you look at floods, if you look at hurricanes, if you look at wildfires, Hurricane Katrina came through, was a awful, catastrophic flood that came through. But we always do see the federal government come in despite the politics. So, you know, I know that it is a tough time in Washington right now, and getting anything through is difficult. But for, any of these types of catastrophes, federal money does come through from FEMA, and we'd expect nothing different in this case. If you looked at Hurricane Katrina, for instance, there was not a single municipal default, even though state and local governments did shut down. We had hospitals shut down.
Right.
Local water credits shut down. But we usually do not see any defaults because of federal state money coming through.
And we should point out our analysts over at Bloomberg Intelligence have been looking at the possibility of defaults. They say that with the existing structures of some of those muni deals that are already out there, that there are enough provisions in there that most of this should still fall on the reinsurers.
Correct. And our analysts have gone out and really done a thorough scrub of all the credits that we own. You know, there's business continuity insurance. There's money that does come in from the government. We're not anticipating that this will lead to any defaults. And I think any of the rebuilding efforts, I think, would actually be welcome in the municipal market. We've not seen a lot of new issuance come. And I think any of that issuance that would come to help rebuild would go in and actually be constructive for our market.
And I'm glad Romaine brought up the idea that there are these key bond provisions and insurance coverage that kind of protects bondholders of the Maryland State Transportation Authority. Sure. Is that standard? Is that something that's kind of across the board for these kinds of issuers?
Yeah, absolutely. I mean, you see that as standard in any of municipal issuance. Any of these type of large infrastructure projects do have those key provisions in place. So generally, again, our thoughts go to the families of this crisis, but we do go in any of these type of catastrophic events, go in and see the insurance come in and kick in, or if it is not there, certainly FEMA money or federal government money often does come through.
Well, thank you for giving us your instant analysis, your instant read here to the latest developments. I want to get your take overall on investor expectations and how it's changed in the muni world, given what we've seen the last couple of years. We've gotten used to these 5% plus returns in our high yield savings accounts.
Sure.
How does that affect people's investment preferences, the products they choose, or the expectations they now have when they're looking at products in the muni world?
Yeah, I think three things right now broadly we're seeing in the muni market. The first is it's just so welcome. Fixed income actually has income for the first time in a very long time. And the muni market went through a very painful period in 2022 and 2023, parts of 23, to get a reset. But you know, the second thought is now we are in the municipal market and we have the highest level of yields to start a year since 2011. So investors right now are getting paid handsomely to wait for the Fed. So if the Fed cuts rates on June 12th, July 31st, or doesn't cut at all, there's still an expectation for a very good total return profile for munis. And last, just the third point is just right now, if you look at municipals, you look at where an investor in the highest tax bracket is, you know, you can earn 5.75% for a nice AA essential service monopoly portfolio. So we're really seeing a very good yield advantage versus anything in corporates, MBS, ABS, and especially I think versus cash and Treasury equivalents, which have been yielding a decent amount, but municipals right now on a tax equivalent basis are yielding more.
And so this gets us to this idea that if you do get that change in interest rates, a significant change, at least a significant change the market wants here, does that change then the appeal or the potential return opportunities?
Yeah, absolutely, because all of a sudden then you shift from clipping your coupon and just having income to a capital appreciation event. And the last time that we had the Fed even hint at a potential rate cut was in the fourth quarter of 2023, and we saw an 8% return for the municipal market. So I think right now investors could get paid to wait, but if we do have this event where the Fed begins to cut, and we have penciled in 3 cuts for 2024, you all of a sudden have both income and a meaningful capital appreciation.
At 4:30 p.m. Eastern Time, we get our weekly US API data. Crude oil stock change prior -1.519 million. Cushing stock change prior 0.325 million. Distillate stock change prior 0.512 million. And gasoline stock change prior -1.574 million. Bear in mind, we do get this data from public sources.
Right now, a lot of folks still trying to assess the damage, still trying to assess the loss of life, but a lot of folks also, they need to know, Carrie, how long can we expect the marine terminals out there in Baltimore to be shut down?
Thanks so much for the opportunity to come on Bloomberg, one of my favorite channels to talk about the importance of ports, U.S. seaports to our supply chains and resilience. First, I've got to say my heart is heavy and aches for the loss and uncertainty that we're experiencing right now. I'm so sorry for those people who were on that bridge impacted. And I think a story that's been a little underreported is that the brave mariners who were on that giant vessel did everything possible to call in a mayday and an emergency and quite literally put themselves in danger. Fortunately, the trestles collapsed on a part of the vessel where they were not working to drop anchor and where they were not on the bridge. So it dropped right in between where all those mariners were. And how long this could take, uncertain. U.S. Coast Guard and dredging and tugboat and emergency response salvage operations are as good as any in the world. This is unprecedented. It's going to take days and weeks before the channel to all of those terminals at the port becomes accessible again.
Yeah, Carrie, I am curious, and for those folks who don't really know this industry or understand the process about these ships coming in and out of the ports, Bloomberg's done a lot of reporting about the signals that the folks on that ship sent to let folks know on the ground something was wrong, whether there was a loss of propulsion or whatever. Was there no tugboats or any other mechanisms out there in place that maybe could have helped to divert this ship? Is that not normal?
As best I understand, there weren't any tugs deployed at the time, but what you've got to understand is that the pilots who are as experienced as anyone in any conditions and know these navigable channels like the back of their hands. There was a pilot and a pilot apprentice on board, as there always would be in a situation like this. And on my limited information and a little bit of speculation, guess that this was a mechanical failure where there was probably no human intervention that could have done anything to prevent what happened. I'm guessing a little bit there, but I don't exactly know what equipment was deployed at the time.
Okay, well, thank you for sharing that. I'm curious to hear from you what type of cargo will be impacted the most with things paralyzed at the moment, and to what extent can that cargo be rerouted to other U.S. ports along the East Coast versus going around to the other side of the country?
Yeah, cargo, especially
at 4:30 p.m. Eastern Time, we get our weekly US API data. Crude oil stock change prior -1 spot 519 million. Cushing stock change prior 0 spot 325 million. Distillate stock change prior 0 spot 512 million. And gasoline stock change prior -1 spot 574 million. Bear in mind, we do get this data from public sources.
On this vessel, which was making multiple calls along the East Coast, but it could be anything from consumer goods to apparel to perishables, which go in refrigerated containers, of course. I know that there was a cargo ship that called on the port, I think just yesterday, which had something like 100 Mandarin orange refrigerated containers. So those are the types of cargoes that this vessel was carrying. And yes, they can be rerouted to other ports nearby.
When you take a step back, Carrie, and just look at the ships that we're using these days, are they perhaps maybe too big to maneuver in older ports that have these aging bridges and less space than the ships that were originally built to handle?
Well, it's a fair question, and it's actually something that the ports and the federal government and policymakers look at all the time. The very first thing I'll say is that our industry's work with the regulators and the Coast Guard would never allow an unsafe situation or a previously known unsafe situation to transpire. So we look a lot at the technical aspects of whether a harbor or a landside infrastructure could accommodate the vessels, and we would never allow a dangerous situation. The second thing I'll say is that it is amazing, and I give huge kudos to federal policymakers for passing recent large-scale generational investment legislation in port infrastructure to help recapitalize what is, as you pointed out, aging infrastructure. But the very last thing I'll say here is that if you look at the specifics of this facility, it probably wasn't size or age that really led to any of this. The depth of the navigable channel there is 50 feet. That can accommodate most any of the types of modern ships that are calling on U.S. ports. And I was very curious. Yeah. I looked at the air draft of the Key Bridge as well, and it has about 185 feet of air draft. So that's the difference between the height of the water and the bottom of the bridge, and that can accommodate most any modern vessel as well. So I really don't think this was an aging infrastructure issue.
All right, really appreciate you taking time for us, Carrie. I know it's a difficult day. Carrie Davis, he's president and CEO of the PA. We're going to stick with this topic here. We heard just a little earlier from one of the two senators from Maryland, Ben Cardin. When we come back, we're going to hear from Senator Chris Van Hollen. That's coming up next. This is The Close on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life.
Shortly expecting the results of the US API data, I'll lead with the crude oil stock change.
Box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to The Close here in New York. We go back down to Baltimore. Kaylee Lyons, the co-host of Balance of Power, standing by right now with Senator Chris Van Hollen of Maryland. Kaylee.
Romaine, thank you so much. Senator Van Hollen is indeed here with me at the scene. We're just behind us. The Key Bridge collapsed very early this morning. Senator, thank you so much for making time for Bloomberg. It has been underscored by many authorities here that this is still an active search and rescue effort. Humans come first. Everything else comes later. But when we think about the ramifications of this bridge now being inoperable, the port not working, commuter traffic being diverted, and knowing you sit on the banking committee, how worried are you about the economic ramifications of what happened today?
Well, as you said, first and foremost, our focus is on finding those who were on the bridge and making sure their loved ones know we've turned over every stone to do that. Look, this will have big economic consequences, which is why we want to work very quickly to try to, first of all, get the port reopened. That means clearing the channel under this bridge. And then, of course, comes the rebuilding of the bridge. But the Port of Baltimore is a very active port, one of the busiest ports in the country, the biggest for roll-on, roll-off autos. So we've got to get the channel cleared as fast as possible. A lot of small businesses depend on it. A lot of workers at the Port of Baltimore depend on it. $2 million in their wages alone a day.
When you say as fast as possible, and knowing that it's very hard to put a precise timeline estimate on things, would you imagine this happens in weeks, or are we more realistically talking about months here?
I cannot put an exact timeline on it. I think the harder timeline is how long it will take to rebuild the
API crude oil stock change, a build 9.337 million, a build of 9.337 million.
Now, I talked to the president today, and I think the country heard him speak earlier. He is devoting every federal resource to addressing this issue. The Army Corps of Engineers is here. The Coast Guard is here. The Navy will help look at the piers that are deep in the water under the bridge. So every federal resource that's available for this kind of thing is being deployed.
And about the federal resources, and the president did indicate he would like the federal government to pay for this reconstruction. Do you have an idea of what existing infrastructure money that has already been spent may go to this, or is all of this going to have to be new supplemental requests that your chamber in the House will have to approve?
Well, there are some funds in what's called the Emergency Relief Fund. This is a fund within the Federal Highway Administration that is there specifically for this kind of emergency. So once the state makes its submission, which I think they're going to do very shortly, some of those funds can begin to be drawn down. Now, for the larger, longer-term costs, yes, we're going to call upon our colleagues in Congress to act as swiftly as they can.
And you have confidence they will, given how difficult it has proven to get things across the finish line on Capitol Hill?
You know, when you have this kind of national emergency, it does unite people across parties. So I'm very much hoping that people will put politics aside. I've spoken to the chair of the, Environment and Public Works Committee in the Senate, Senator Carper. Ben Cardin and I have both spoken to Chuck Schumer and others, and I think in the end we'll be able to put together a bipartisan consensus.
Well, and you mentioned how obviously this is a regional issue that is being felt most immediately here, but could have national implications in terms of the supply chain. You mentioned that autos obviously are a big factor here at the Port of Baltimore, but there's many commodities as well that are exported from here. Is there a sector or an industry which you are most worried about being able to adapt to the condition of this port being closed, being able to be rerouted easily?
I don't know of one particular sector, but this is one of the busiest ports on the East Coast. And, those ships will be looking for other temporary places to go. The challenge and the necessity for the Port of Baltimore is to make sure that once we clear the channel, we get all those ships back. That the livelihood of this area depends on it.
And finally, Senator, as we talk about supply chain issues, obviously we are now a few years removed from a pandemic which roiled supply chains globally. Are you more confident in the ability for Maryland, the ability for the U.S. to face this challenge now because of that, or are there still vulnerabilities that haven't quite been addressed yet?
Well, I think we made a lot of improvements. I think we have learned from COVID. I mean, we had this huge backlog out at the Port of Los Angeles, and I think from that and other situations at ports, we've improved our supply chain mechanisms. I'm sure there's plenty of room for improvement, and this shock to the system will show us where some of those weaker links are, so that we can strengthen them. But the main thing here in Baltimore, finish the search and rescue operation.
Seeing Cushing, a build of 2.392 million, a build of 2.392 million. Distillates, a build of 0.531 million, a build of 0.531 million. And gasoline, a draw of 4.437 million, a draw of 4.437 million.
Senator Chris Van Hollen, the Democrat from Maryland, thank you so much for giving Bloomberg TV your time. And Scarlett, we'll send it back to you.
All right, thank you so much. Bloomberg's Kelly Lyons, co-host of Balance of Power. Let's pivot back now to corporate news. Romain, you've got something for us with a timely anniversary.
That's right. We just got GameStop earnings. The shares down in after-hours trading. So what better reason than to look back in history? 3 years ago this week, it actually marked the beginning of the end of the GameStop bubble. Yeah. It was a euphoria cultivated on internet message boards. It lifted a dormant microcap stock and really turned it into the talk of the town. We all know that story. Chewy co-founder Ryan Cohen joining the board, eventually taking control of the company. You had names like Chamath Palihapitiya, the venture capitalist, bragging about buying calls in the company. Elon Musk reposting GameStop memes from Reddit's Wall Street Bets forum. High-profile endorsements, along, of course, with that roaring kitty making the fundamental case from his basement. It was rocket fuel for the stock. A 12,000% surge over 10 months from 70 cents a share to 87 bucks by the start of 2021. And at one point, you had a money-losing legacy retail business nursing an almost 50% multi-year drop in revenue that all of a sudden found itself with a market valuation larger than a tenth of the stocks in the S&P 500. The peak market cap, $24 billion at the close on January 27, 2021. But by mid-March of that year, the bubble did begin to deflate. 3 years ago, yesterday, GameStop reported a drop in profitability and a 12th consecutive quarter of slowing sales and decided not to take questions on the conference call. The shares, they plunged 34%. And then a day later, well, they rallied 53%. It was indicative of the extreme volatility commonplace for the stock. Realized volatility averaging about 400% at the time, more than every other stock in the Russell 2000, and that includes other meme favorites like AMC, like Express, and Cassava. It was dumb money's moment in the sun, a story made for Hollywood. Now, we don't talk as much about GameStop anymore, or AMC, or the Nine, or Zomedica. But has the meme stock rally really faded, or did it simply rotate? Take Sweetgreen. It's doubled its price in the past month. Weight loss pill developer Viking Therapeutics has quadrupled since late January. And Supermicro, a once obscure computer server maker, 1,200% higher in little over a year. And today brought us a new meme stock, with DJT climbing 59% in its first session. And last week, Reddit, the launch pad for the retail investor frenzy, itself went public and is now trading at double its IPO price. Now, it's hard to say if this is the genesis of a new frenzy, but for what it's worth, the Selective Roundhill Meme Stock Index, which includes favorites like MicroStrategy, Kava, SoundHound, and Celsius, has returned 28% over the past 2 months alone. That's more than quintuple the gains of the NASDAQ 100.
Yeah, I think you've made the case that meme stocks are back, certainly, just in kind of a different form. For more on GameStop, Reddit, and the meme stocks overall, let's bring in Bloomberg's Bailey Lipschultz. And Bailey, we talked about GameStop reporting earnings, and usually when I say earnings, I put little quote marks around it because it's been reporting losses, as Romain has told us, on a quarterly basis. However, the fourth quarter was a different story, and the full year for this past year was also a different story.
Profitability, Scarlett. You close stores, you sell games, and seemingly Ryan Cohen can eke out 6 cents on a fully diluted basis, adjusted basis, for the 53 weeks ending in February. Romain.
Yes.
What do you make of that?
Well, what I make of it is, well, sales are down by double-digit percentages. Even like the little, what do they call it? The business that sells those bobbleheads, the accessories. Yeah, that was down like 20 or 30%. What's going on, man?
Well, it's tough to compare it to estimates, right? There are only really two analysts that actually.
Are there estimates?
It's estimates in quotes, maybe. But as you mentioned, the sales are down. That's why you're seeing shares down about 15%. I just want to call out, though, this stock had rallied the last 2 days. This is an options play because it is a retail trader favorite. Options were implying a 23% potential one-day swing. I'm not going to close my eyes and be shocked, though, if the stock opens in the green tomorrow, simply because there really are no rules with this company.
There are no rules with this company. All right. Bailey Lipschultz, thank you so much. That's a good way to segue into our next conversation, because our next guest says the meme stocks phenomenon is here to stay. Joining us now is Matthew Tuttle. He is CEO and CIO of Tuttle Capital Management. Matt, great to speak with you. Thanks for joining us. GameStop, the whole phenomenon, is that over, or does it kind of live on in dribs and drabs?
So it's not over at all, and it lives on very powerfully. I mean, you just mentioned it. You know, Truth Social was the stock today. They have moved on from GameStop to an extent, but GameStop's become kind of a comp where if some other meme stocks are rallying, if someone missed something else, they're going to jump into a GameStop or an AMC. It's not going to be the main name anymore, but it's still in play.
It's still in play. So, you know, here at Bloomberg, we like to dig into the corporate earnings and give you all get granular and give you all the details. I'm looking at their earnings release. There are 9 bullet points on here, and they also have said they're not going to be holding a conference call. They did give some details in their 10K filing to regulators, saying that they've changed their investment policy to a committee structure. Doesn't that kind of go against the idea of a GameStop that is basically catering to individual investors who want information?
So not in this case, and not with a meme stock. I mean, you guys said it. That stuff doesn't matter to the people trading it. All that matters is...
To Roaring Kitty, it matters, though.
Well, but to a lot of the smart people out there who are on Twitter, who are in the Discords, who know how to move this stuff, they're looking for high short interest, and they're looking for options that they can juice up. And, you know, they're just looking for something to move. They move it for a day or two, and then they move on.
But one thing that's interesting about the latest, I guess, iteration of the meme stock trade here, you don't necessarily have the same emotion that I think we saw with GameStop, because so much what drove that stock was there was a lot of animosity against Melvin Capital and Ken Griffin, whether he was even involved in it, who knows, but they all hated him as a result and felt like they had to push the stock up. And that was a huge groundswell for that, for AMC, and for a couple other stocks back then. Do we not have that same type of emotion?
You don't. And I saw it. I made the mistake of tweeting something about AMC once years ago, and I just got savage.
And have My never done it. condolences, yeah. Yeah, never done it since. But no, I mean, now what you've seen, what GameStop and AMC did is it showed the smarter retail traders how to do it. Yeah. And for them, there's no emotion. It's just what's today's play? Oh, all right, it's Truth Social today. Yeah. Everyone's jumping on it. Well, I wonder if we kind of, when we use the word meme stock, we always kind of almost use it in a derisive manner. And we forget, I mean, she mentions Roaring Kitty, but we kind of forget, I mean, he was basically doing bottom-up fundamental analysis, and he was the one who looked at that stock and said, look, there's something there. And long-term, maybe it's not there, but certainly in the moment, he tapped into something that the institutional investors either didn't see or just didn't want to see.
Well, the institutions are still stuck in the old fundamental analysis. And as long as they are, that allows the retail guys to take advantage. You know, was Melvin Capital right to short this stuff? Yeah, they probably were. They're not here anymore.
Yeah.
And, you know, the retail guys are taking advantage of the people who look and say, this is a short. Okay, maybe back 20 years ago it was a short. Today, it's going to get juiced up, and you're going to lose a lot of money.
Who's brave enough to really get in front of that, though? I mean, there was all this talk about DJT and how there's a perfect short. Then you look at the premiums on that, and you're like, you'd be insane to short that.
Yeah, well, I mean,
people were shorting it.
Yeah.
Well, or you don't have to short it. You could just do it through options, right? I mean, why go down that complicated path? So talk a little bit about the IPO market, because Reddit, of course, went public earlier this year, and then you have DJT making its trading debut, not by the traditional listing, but through a blank check company merger. What does that say about the companies that are looking to maybe list on the stock exchange and, you know, maybe ride this wave of retail investor interest?
So I think what happened with Reddit and some of the other IPOs and DJT, hopefully DJT brings SPACs back. That'd be a lot of fun. The retail guys would love that, and we run a SPAC fund, so I'd love to see it. But what that shows is companies that are looking, maybe IPOs are back, because everything has pretty much come back to the way it was before COVID, except for the IPOs. So hopefully that starts the IPO engine going, and I think that'd be great for everything.
But you need to see a little bit more strength in that secondary market. We've had some decent IPOs come out of the gate, but then we've seen over the days and weeks following, you just don't have the same investor appetite.
Right, and you also, I mean, you need some good companies.
Yeah.
You know, a lot of these have come out, and certainly the SPAC ones, you know, those all go down to one eventually.
Yeah. Well, like, I mean, something like DJT, I mean, look, we're talking about a company that I think last time I checked had like $4 million in like annual revenue. So let's just set that to the side. And obviously we know Donald Trump, that's a whole juggernaut on his own.
Yeah.
But take something like Supermicro, which makes real things, has real sales, and has seen this massive pop. I don't know if it's justified, 1,200%, but isn't that something that it's memey, but there's also a fundamental nature to it?
It's memey, there's a fundamental nature, and even more important, there's an AI nature.
Yeah.
And anything AI, you know, non-NVIDIA, because, you know, NVIDIA could keep going and going and going, but you're probably not going to get a super micro move out of a NVIDIA.
No.
So the retail guys are now looking, what's the next level? And super micro, is it, you know, ARM? There's some other names that they're looking at as well.
What's the newest meme stock name? I mean, aside from DJT, which went public today, or which began trading today.
So, you know, you've named most of them here. I think ARM has some potential. You know, I'm in a lot of different discords, and they're talking a lot about ARM. So that one definitely has some potential. I'm hearing a lot on the options. We might look at that to do a single stock ETF on. So that, I mean, if I had to say one that you didn't already mention, that could be the next.
All right, Matthew Tuttle of Tuttle Capital Management, thank you so much.
Thank you.
Really appreciate it. All right, when you look at markets today, Romano was kind of a big yawn. We did kind of sink towards the close, and when I say sink, it's in quote marks, because we closed down 0.3% after doing not much of anything for most of the trading session. And not a whole lot going on in the Treasury space either, even with a $67 billion auction of 5-year notes.
Yeah, not a whole lot going on. A couple economic data points, and other than that, you're basically in a holiday shortened week.
Yep.
So, and again, I always like to point out, when you get to the end of a month, end of a quarter, I should say, like this, so we're 2 days away from the end of the quarter, the price action really starts to get distorted. Not necessarily a reflection of how people feel, just a matter of what they need to position for the end of the quarter.
All that quarter-end positioning with equities up about 10% by with the S&P 500 so far this year. This is the close on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep winning World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
All right, welcome back to The Close. 4:49 here in the U.S., about 4:49 a.m. over in Beijing, where some U.S. executives will be sticking around the country for a little bit longer. We are learning that they have received invitations to a dinner on Wednesday to meet with a top Chinese leader that is widely expected to be President Xi Jinping. Enda Curran joining us right now from our Bloomberg Bureau down there. Enda, what do we know here about this potential meeting? We know the executives are there. We've seen all the footage here. And now we've got this cryptic story that they've got a dinner set up with a top official.
Yeah, our colleagues in Beijing are reporting that some executives are going to wait back for an extra day to meet with the
In 10 minutes' time at 5 p.m. Eastern, we have the South Korean manufacturing BSI seasonally adjusted with a prior of 76.
President Xi met business leaders. There was kind of a bit of a coded invite to executives to get together to hear from China's top leader, and it looks like that's what's going to happen here later on Wednesday in Beijing also. We don't know which executives will be attending it, but we do know some CEOs of some of the biggest US companies have been there for talks. But by all accounts, the bottom line is this will be an opportunity for China to repeat the message that it is open for business and that it welcomes foreign investment.
Okay, so given that we've seen some of these CEOs meet with Chinese officials back in November when Xi Jinping was in the U.S., does that suggest that there's been kind of a steady engagement between the Chinese government and U.S. CEOs this whole time that kind of is culminating into this potential meeting on Wednesday?
Well, there's certainly been a consistent message from Beijing that they want foreign investment, Scarlett. They want foreign know-how and technology, and they're preaching this message that they're clearing the hurdles to make it easier for foreign business to operate there. And we saw that move, for example, on data transfers recently. Obviously, though, corporate sentiment remains quite fragile. It hasn't yet recovered from the COVID-0 days. There is plenty of criticism around the opacity of the Chinese government and the various policy measures they've taken in terms of the reluctance to get the economy going again, for example. So it feels more like outreach from the Chinese side rather than, US CEOs or global MNC CEOs being convinced that China is turning a corner. But nonetheless, yes, it's another example of both sides coming together, and it's not too long ago when even that wasn't happening.
Okay, that's interesting. I didn't realize it was more of an outreach by China rather than the other way around. What can you compare and contrast that with Beijing's relationship with company leaders from other parts of the world, for instance, from Europe or from Africa?
Well, with Europe, China has been, I'd say, explicitly courting Europe. You've seen some analysts make the point, of course, that China's been trying to play Europe off against the US, so there has been a concerted, separate kind of effort there. Same is probably broadly true of what analysts refer to as the global south. China, of course, has been courting business in that part of the world too. The deep freeze has been on the US-China side, and the finance and the banking and the corporate world has been one channel that has been kept open to some degree, even as both governments stop talking to each other. And I think this meeting on Wednesday, providing it goes ahead, is just another example of how both sides are kind of on timeout in terms of the tensions between the two economies. But regardless of what comes out of this meeting, it's probably not going to change the bigger picture of the geopolitical tensions between both governments.
Yeah, certainly so. Certainly not in the short term, but a long game by some of these CEOs. And great to catch up with you, Enda Curran, in our Washington, D.C. bureau, keeping an eye here. Those U.S. CEOs set to meet, based on Bloomberg reporting, with President Xi Jinping at some point later in the day. We're also going to set you up for some of the other big market moving events over the next 24 hours. That coming up after the break on Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
In 5 minutes' time at 5 p.m. Eastern, we have the South Korean manufacturing BSI seasonally adjusted with a prior of 76.
Collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock.
Yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Market catalyst this week, a bit limited, but we do get some earnings tomorrow, Scarlett, including out of RH.
Yeah, RH Restoration Hardware, of course, Carnival Cruise Lines, Land's End, so certainly a read on the consumer.
Absolutely. We also get, well, some central bank decisions.
Yeah, Sweden's central bank expected to keep its rate at 4%, but may lay the groundwork for a cut before the end of June.
And then back here in the U.S., Fed Governor Christopher Waller scheduled to speak.
I feel like he's the one that we need to start paying attention to.
Really?
Yeah, among the Fed policymakers.
Tell me more after the break, but stick around. Balance of Power is coming up next. Scarlett and I will be back tomorrow. This is Bloomberg.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
10 seconds.
Get your fixed income fix.
74, 74.
Every Friday, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew. President Biden pledges to use federal funding to rebuild the Key Bridge in Baltimore, which collapsed this morning after being struck by a cargo ship. 6 people are still unaccounted for. Former Transportation Secretary Ray LaHood will join us with more. The Supreme Court hearing arguments today in a case that could restrict access to the abortion pill mifepristone, the first abortion-related case before the High Court since Roe was overturned. We'll talk this hour with legal scholar Carol Sangner of Columbia Law. And our new Bloomberg News Morning Consult poll brings good news for Joe Biden, showing the president gaining ground on Donald Trump in 6 of 7 swing states. We'll have much more coming up over the course of this hour on these new numbers. Thanks for being with us on this Tuesday, live from Washington. With breaking news this morning from Baltimore that has captivated the Capitol, we heard earlier from Maryland Governor Wes Moore speaking with reporters following this bridge collapse that happened around 1:30 a.m. when a cargo ship ran out of power and struck one of the pylons under the bridge. Here's the governor.
This is still very much an active search and rescue mission, and there is not a single resource that we will hold off on deploying. I have already authorized the deployment of everything from air, land, and sea resources to make sure that this search and rescue operation is carried out to its fullest intent.
With 6 souls still unaccounted for, we want to go straight to my partner, Kaylee Lines, who is in the field today at the scene of that bridge collapse in Baltimore. Kaylee, what can you tell us?
Well, Joe, you're absolutely right. There are still 6 individuals unaccounted for, and that is the priority of all of the authorities that are involved in this situation at this point. We heard it from Governor Wes Moore, Senate leaders that were here, Senate representatives and congressional representatives from Maryland, as well as Transportation Secretary Pete Buttigieg, all reiterating right now search and rescue is the priority, the humans and families involved in this. Of course, very quickly thereafter, though, this will turn to a story of recovery. It's unclear what exactly the timeline will be to get this vital way back up and running here. Of course, there are 35,000 individuals that were going over this bridge daily in terms of commuter traffic, also freight and logistics that happens by road. But this is also one of the busiest ports in the United States of America, handles cargo, including autos, the most port handling of autos as any port in the country. 850,000 vehicles almost were handled here last year, in addition to commodities, including millions of tons of coal. So all of that is the economic ramification we have to think about today, and certainly that was on the mind of officials we spoke with here. But the problem is it could take a long time for this to sort itself out. Pete Buttigieg said the path to normalcy will not be easy, it will not be quick, and it will not be inexpensive. And on the point of expenses, on that point, Joe, we did hear from President Biden earlier today pledging that it will be the federal government that is paying this bill for the reconstruction of this bridge. Of course, he will require congressional approval for that in large part, and it's going to be a question of just how long that reconstruction will take, and of course the clearing out of the debris that is currently in the waterway behind me more immediately to get this port back open.
Kaylee, we're really glad that you're there today. Thank you for your reporting. Kaylee Lines, of course, with us. She'll be back a little bit later on this hour when we speak to the former Transportation Secretary, Ray LaHood. We did hear from the president today from the White House. Here's President Biden from earlier.
I spoke with Governor Moore this morning, as well as the Mayor of Baltimore, the county executive, both United States senators and the congressman. And my Secretary of Transportation is on the scene. I told them we're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together.
We now add the voice of Bloomberg White House correspondent Josh Wingrove. Josh, thanks for being with us today. President Biden, in that set of remarks, said the federal government will pay for the entire cost of rebuilding that bridge. We'll deal with potential liabilities later. That's the word from the White House. Now there are calls for him to actually go to Baltimore. Will he do that?
Yeah, I think that's up in the air right now, as is the question of whether Congress will ultimately agree to pay for this. This would be a pretty expensive project. It's, we're talking probably years, maybe, to redo this thing, or at least that would be the normal time frame. Biden, at the very least, is going to shift the blame to Congress if they don't fund this thing, and so that's sort of where we're standing on that. In the meantime, I think we're going to see them heavily involved in that question of opening this channel up again once that search and rescue is complete. Biden and his administration put a lot of emphasis on that today, saying that is the priority. And of course, if that search and rescue mission turns into more of a recovery mission, then the question is, how can we get this channel open again, get this ship out of the way itself, get the debris out of the about 50-meter depth path. It's already kind of a squeak-through scenario for some of the bigger ships coming up here, so they need to basically clear it out pretty well to get things going again. And that'll really sort of address the immediate economic sort of chokehold factors here.
Once we get through the search and rescue operation, we want to be sensitive to the fact that they're still searching for 6 people, by the way. These were construction workers who were on that span when it went down. That's right. We've heard as many as 7. There's going to be an economic impact here that we have to acknowledge for a president who's been trying to fight inflation, watching shipping get moved around in the Red Sea, Now we're going to be steering around. Maersk says it will be rerouting around Baltimore. If you're with us on Bloomberg TV, you can see that bridge collapsing right now. Remarkable to watch that. This is a difficult scenario when we consider the impact on trade and pricing.
Yeah, I think, the particular sectors will be more heavily impacted. Baltimore's port, you heard Kaylee talk about. Autos, pretty significant, right? So if you're, for instance, waiting for a Ford in Minneapolis, you're probably okay. If you're waiting for a Volvo in Pittsburgh, maybe less so. I mean, it's going to be very sort of regional impacts from this. It's also an export terminal. We could see that start to pile up. And so that'll work its way through. But, we had a story today on the terminal about gas prices looking like they're going to go above $4 a gallon again this summer. There have already been these questions of whether the Red Sea attacks, as you mentioned, would sort of flare things up. This is sort of like a sort of more medium-term question. Again, search and rescue camp effort ongoing. But the political risk here for Joe Biden is that the supply chain snarls flare up again. Voters remember that they're ticked off about how expensive things are and have gotten over the course of the post-pandemic recovery, and that they have that top of mind heading into the fall election. But as of now, in particular with our poll coming out today, Biden does have some momentum, and I think obviously he'll hope that they can build off that.
We're going to get more into that now. Josh Wingrove, thank you so much for being with us. With the view from the White House, President Biden is gaining ground in that poll. This is the new Bloomberg News swing state poll. It's out today. Gaining ground on Donald Trump. Bloomberg senior editor Wendy Benjaminson is here with us now with details as we dig down into these numbers. Wendy, it's great to see you. These, again, are the 7 states that we believe will help to decide this election. And Joe Biden, when you look at Pennsylvania and Wisconsin, suddenly has a more interesting story to tell.
He absolutely does, as long as all the things that Josh just described don't happen and drag him down. But while this poll was in the field, it went out the day after his State of the Union address, which was widely considered to be a political success for him. He is now up 1 point in Wisconsin and tied in Pennsylvania and Michigan. And as Josh has written about, those 3 states are the states that will deliver either one of them, Donald Trump or Joe Biden, to the White House. And so if he can keep up that momentum in those industrial states and pick up the other states where he is narrowing the gap with Donald Trump in every state in our poll except Georgia, then, he actually, if he can keep that momentum going, he's in better shape than he was just a month ago. Now, gas prices hit $4 a gallon. He has another moment where he seems really old. All of that can turn around very quickly. One of the other things that was really interesting in our poll was we measured the depth of support for the candidate himself or for or how much it was a protest vote against the other guy. And for Trump voters, 3 out of 4 of them are voting for Donald Trump. Affirmatively, they are in it to see Donald Trump get the White House, while only a quarter of them are voting against Biden.
Sure. Yep.
On the other hand, Biden voters, 45% of the people in swing states who are going to vote for Biden say they are doing it to stop Donald Trump. Not so much we think Joe Biden's a great guy. And so that's something also the White House and the Biden campaign really has to measure.
Remarkable to see folks on both sides, by the way, and this is knowing that Donald Trump is promising to make the 2017 tax cuts permanent. Both sides favor taxing the rich, soak the rich.
Really
more than $400,000. How do you vote for Donald Trump if you think billionaires should be taxed at a higher rate?
Yeah, that was really, really surprising to us. So we found out that about 70% of swing state voters across the board favor higher taxes, income taxes on people who make more than $400,000 a year, and a higher tax of some kind on billionaires, whether that's a wealth tax or not. And that included a majority of people who describe themselves as conservative or Republicans.
How about that?
And so if Joe Biden wins and wants to increase taxes, they also favor increasing the corporate tax rate. Then Congress is going to have a hard time saying, no, our people don't want that, because their people do.
This is fascinating. It's worth the read. Find it on the terminal. And, of course, Bloomberg.com. Our thanks to Bloomberg's Wendy Benjaminson, who put a lot of time into making that poll accessible for us. Coming up, former U.S. Transportation Secretary Ray LaHood joins. And we'll have Kaylee Lyons with us live from Baltimore. It's next on Balance of Power on Bloomberg TV and radio.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is going to take some time. The people of Baltimore can count on us, though, to stick with them at every step of the way until the port is reopened and the bridge is rebuilt. You know, we're not leaving until this job gets done.
President Biden earlier today speaking from the White House saying the federal government will be there for Baltimore and in fact will pay for the entire cost of rebuilding the bridge. That is yet to be determined. But back with me now is my partner Kayleigh Lines, who is in Baltimore. She's been at the scene of that bridge collapse for the balance of the day. We also welcome former U.S. Transportation Secretary Ray LaHood to the conversation. Mr. Secretary, thank you for being with us today. This has been described by Pete Buttigieg as a cathedral of infrastructure. The people who live in Baltimore went to bed last night with their bridge and woke up with it gone. The skyline of Baltimore has changed. The president is springing into action here. At least he says the federal government will take care of this. I wonder your reaction, considering your experience running the transportation department, to see this 1.5 mile long span gone.
Devastating for the region, devastating for the supply chain, devastating for people who have to traverse 37,000 cars a day across that bridge that no longer exists. This is a huge, huge calamity of gigantic proportions for the region, for Baltimore, for the Washington region, for the kind of opportunities that that port has provided to deliver goods all over the world and back into the United States also. But the level of cooperation and coordination and elected officials and appointed officials working together today has been extraordinary. Gold stars to everybody. Everybody's all hands on deck. That's what it will take to rebuild the bridge, to open the channel, to get the supply chain moving again, and also to figure out what happened.
Well, sir, as you talk about all the different authorities that are cooperating on this, pretty much all of them are reluctant to put any kind of timeline on the duration that this may be disrupted. The idea that this port may be closed for some time. Certainly it will take a long time to reconstruct this bridge. They are focused less so on timeline right now, as this is an ongoing search and rescue effort. But what do you anticipate, with your experience and any precedent you've seen, that timeline could look like? How long are we talking? Weeks or months or even years?
Well, if you look at what happened in Minneapolis when that bridge collapsed, completely different circumstances for the collapse. It was rebuilt in a very short period of time. If you look at what happened in Pennsylvania when the bridge collapsed there, again, different circumstances, but the rebuilding took place very quickly because of the commitment of the federal government, DOT, and the state's DOTs. Now, look at the first and top priority is to continue to search for those who have been lost, those that were on the bridge. And once that is complete, then you'll see a comprehensive plan for reopening the port, reopening the channel, and replacing the bridge. And I think it'll be a timetable with all of these people working together that can be sooner rather than later.
Well, sir, I spoke with both senators from Maryland earlier today who were talking about the humans that we have to consider here, not just those who are still unaccounted for and their families, but also those who have jobs at this port, knowing this is a major economic engine for the state of Maryland. And while we are seeing that cargo operators and companies who have cargo that would through this port are starting to divert, both suggested to me they want to make sure that cargo does come back to the port of Baltimore. Would you have any concern that just the flow of transport may be permanently changed by this rather than just temporarily displaced?
Not at all. I think the port is such a significant port, its location, the way that it's managed, the way that they're able to deliver goods in and out of that port. As soon as the channel can be reopened, the port will be reopened. That will mean having to remove the bridge that's collapsed. That's going to take a little time. But as the governor said and the mayor has said, top priority is finding the people that have been lost from the fact that they were on the bridge and trying to locate them. Once that's done, I think you'll see very, very quick activity in getting the port open.
Secretary LaHood, you don't need me to tell you there are thousands of bridges, tens of thousands of bridges around this country that are structurally deficient. That's why we went through the process of getting this bipartisan infrastructure law that the president's been talking about a lot lately. But Wes Moore today, the governor, said that this bridge was up to code. So it strikes me this is not an infrastructure story we're talking about. I guess my question is, should bridges be able to withstand an impact from a cargo ship like this? Was this really something that was the fault of the shipping company or the structure of the bridge?
The bridge was built in 1977, long before Baltimore became the significant port that it is today. It is a significant port in our country and in the world, and that bridge was built well before that. I do believe that if you look at structures that are built today, and I have, that the new bridges are built to a much, much higher standard, and that's the way the new bridge will be built along this corridor also.
Sir, you, of course, in addition to being Secretary of Transportation, served as a member of Congress. And knowing that President Biden has said that the federal government will be footing the bill for the reconstruction of this bridge, that is something that would require congressional approval. And we haven't seen Congress be the most functional in the funding department as of late. Would you have any concern about that funding being approved?
Not one bit. This is like a hurricane that hits an area. It's like a tornado that hits an area. What happens is Congress steps up, appropriates the money, and takes care of the people and takes care of the region that's impacted by some kind of a weather calamity, whether it's a fire, whether it's a hurricane or tornado. I have no doubt that Congress will step up under the leadership of the Maryland delegation, under the leadership of the White House, and provide the funding that's needed to rebuild the bridge.
Secretary, we're glad you could share your experience with us today. Former Transportation Secretary Ray LaHood, thank you for the insights. Kaylee Lyons will be back with us a bit later this hour from Baltimore. Coming up, a massive windfall for former President Donald Trump, at least on paper. To follow the SPAC today, we'll have more on that next. This is Balance of Power on Bloomberg TV and radio.
Here's Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Wild stock swings today, the first day of trading for former President Donald Trump's social media firm, Trump Media and Technology Group, making its debut on the public market and potentially adding billions of dollars to Donald Trump's fortune. We know he needs the money. For more, let's bring in Bloomberg's Bailey Lipschultz, who's had eyes on this since before this went public. Bailey, it's great to see you. Look, we spent the balance of this year talking about cash burn and the Trump campaign bleeding money, whether he can post bond in a civil trial in New York. How much does he actually stand to make today? How much did he make on paper?
Yeah, so in total, Joe, right now with the stock valued at about $7.8, $7.9 billion, he's worth about $4.5 billion on paper. And that number can get closer to $6 billion when using where the stock closed at if it continues to perform well, because as part of the deal, if the stock trades above $17.50 for 20 of 30 days, well, then they give tens of millions of dollars to Trump media insiders, of which Trump owns the majority of that. So the potential billions upon billions of windfall could deliver a big payday, again, on paper for Donald Trump.
How long does he have to lock this in? How long is the lockup?
Currently, as the terms stand, 6 months. That could be edged forward slightly based on some of the terms of the deal, or if the board, which is made up of members of his administration, as well as insiders at the company like CEO Devin Nunes and the Digital World CEO Eric Swider, if they move that deadline forward, he could sell sooner than later. But again, kind of to that point where he would make more money on paper if it trades well for 20 or 30 days. It does kind of seem like maybe that'll be a bit of a walk and dance in the next few weeks.
Remarkable headline with your byline on the terminal, Bailey. Trump Media now the most expensive U.S. stock to bet against. Does everyone think this is going to zero?
There's a lot of skepticism, Joe. This is a company, again, valued north of $7 billion. In the 9 months through September, it brought in just $3.4 million. So on any real traditional valuation metric, it's probably overvalued relative to peers and fits into the meme stock category, but that's why it gets so risky, because it's difficult to borrow shares as short, and also there's so much inherent risk that when a stock that jumps 58%, just because it's ticker changed and it's associated with the former president, there's risk, again, like the GameStop mania, that it could continue to move higher.
Heard a few references to GameStop today. Bailey, all of this said here, Donald Trump sitting back enjoying this story tonight. You're telling us that he could move up the date to cash some of this in. This is a company that's never made money, correct?
Correct, and it's really a new company. So this deal was struck in October 2021, basically on this idea that something called Truth Social would be launched in early 2022. They lived up to that. Right. Donald Trump, though, only really has 6.8 million followers on that platform, so not living up to the expectations some had.
Fascinating. We'll keep our eyes on this. I wonder how it opens tomorrow. Bloomberg's Bailey Lipschultz, thank you. As always, coming up, we'll have more on the Baltimore Bridge collapse. We're going to talk about how U.S. ports might be impacted, the economic side of this important story next on Balance of Power on Bloomberg TV and radio.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested, they want to be an early adopter of the stock, they're interested in the story.
This is Bloomberg.
Every day the harbor's closed, it's millions and millions of dollars lost to the local economy. People are going to be out of work. They're not going to get paychecks. We got to move with great dispatch. But first, let's see whether we can't save some lives.
Democratic Senator Ben Cardin of Maryland earlier today speaking with Bloomberg's Kayleigh Lines at the site of the bridge collapse earlier. Kayleigh is back with us now, having spent much of the day in that very spot. Kayleigh, what can you tell us?
Well, Joe, we are now 16 hours from 1:30 a.m. Eastern Time, which is when the Dolly, this vessel, collided with the Key Bridge and it subsequently collapsed. That is just how long this search and rescue effort has been underway. Of course, 2 members of a construction crew that were on the bridge at the time were rescued, one of which was hospitalized. 6 others, though, still remain unaccounted for, and that remains the priority of all of the first responders and authorities involved in this effort, is first and foremost trying to, as we heard the senator say, save lives if they can. Very quickly, though, it will move to a question of recovery and just how long it will take to get transit, and specifically waterborne transit, in and out of this port once again moving. It could be a long haul, as we're talking about autos, commodities, other shipments, imports and exports that move through this port have been disrupted. Companies diverting their cargoes to other ports along the coast, including New York and Norfolk down in Virginia. And of course, commuters and freight distribution that have used this bridge consistently every single day are now having to go the long way around, potentially adding miles to those journeys. So really, it's going to be a matter of sequence. Senator Cardin, in a press conference earlier this afternoon, did say first and foremost search and rescue, then get the port reopened, and then work on reconstructing the bridge. And on the reconstruction, President Biden today said that he does expect the federal government will be paying for that. It is something that would require congressional approval if he has to make a supplemental request. And I actually asked Democratic Senator Chris Van Hollen about that earlier today, just how this funding was going to be broken down. This is what he told me.
There are some funds in what's called the Emergency Relief Fund. This is a fund within the Federal Highway Administration that is there specifically for this kind of emergency. So once the state makes its submission, which I think they're going to do very shortly, some of those funds can begin to be drawn down. Now, for the larger, longer-term costs, yes, we're going to call upon our colleagues in Congress.
And both he and Senator Cardin did express to me confidence that it will indeed pass Congress. But of course, as we just heard Senator Van Hollen say, we're talking long-term here. This is probably going to take a while. No one to this point has been willing to put a timeline on either the port reopening or on reconstruction. Everyone still remains at this hour focused on the search and rescue efforts that are ongoing here in the Baltimore area, Joe.
We're lucky to have you there for us, Kaylee. Thank you. My partner, Kaylee Lines, live from Baltimore, where that bridge collapsed in the wee hours. Another major story that's resonating in Washington today and nationally, the Supreme Court signaling that it is likely to support access to the abortion pill mifepristone. We were, of course, listening to arguments today, and joining us now, Carol Sanger, Columbia Law School professor, author of About Abortion, Terminating Pregnancy in the 21st Century. Carol, it's great to have you with us here. I'm wondering what you heard in those arguments today, and if this conventional wisdom is that the Supreme Court will support mifepristone, support access. Is that how you heard it?
That is how I heard it. And it's interesting that we're now calling this Supreme Court conventional wisdom, that it might actually favor pro-choice policies, because that's not their reputation. And we know we last saw them in the Dobbs case a year and a half ago, where they removed the Roe right to abortion as a federal constitutional right. So, yes, that's what I heard. And it came as not a surprise, because if you read the briefs, you see things really were tending that way. But there was some, I won't say enthusiasm, but the justices seemed very clear in their views and not skeptical of the approach that they seem to be taking, which is to use a very neutral doctrine